Welcome, everyone. Can you hear me okay? There's your faces nodding. Good. You know what this is, right? Second to last week. Did it fly by or did it drag by? Can you believe it? We had a pretty good time on Saturday. Sorry, those of you who couldn't miss it, couldn't make it. It's up. You might have already checked that out. It was live streamed. A little math tutor session, a couple hours or so. And I think we'll do a review session this Saturday. Anybody interested in such a thing as that? Would you like to have a little extra something like that? We'd also live stream that one. We've got a bunch of little baby chapters left to cover. Tonight we're going to do insurance, landlord tenant, and property management. That'll take most of our time tonight. And then tomorrow we'll finish up with the last 4 small chapters. That'll take about half our time. The rest of the time is all about review. So I saw a couple of you have taken the final, and that's a good idea. The practice final, you could go ahead and do that if you want to. This week probably, and then have the weekend to think about it and talk about the wrong answers. And so if you join us Saturday, all the better reason to go ahead and take it before then, because while we will cover it in class, it's always nice to cover it as much as possible. So now it's sort of a free-for-all. Whatever exams you have not taken twice the second time around, go ahead and do that. Right? Take the quarter, the midterm, the license law, the relink, and the final. I might take one of the finals this week and then maybe save the other one for the weekend, something like that. But, you know, we've got tonight, tomorrow, next Wednesday, and then right? Test night next Thursday. And just as a reminder, if you score 75 or better next Thursday night, congratulations, you're moving on to the PSI level. If you score a 60 or better, but not quite a 75, then you get to retry the test without having to take the course again. If you go 59 or lower than a 60, you will have to complete the course again in order to retest. Just FYI, that's how all that works. The test is going to be a class marker. Jason will release it. It'll be the same thing you've experienced before, that same interface. And it'll just be me sitting here quietly while you're doing that, and everybody's muted, and I'll have it set so you really just see me, and I'm available for you to direct message me. Let me know when you need to go to the restroom. You get like a restroom break, and Jason will be here to make sure you get kicked off properly, get it started properly. Let me not use that word, kicked off. But that is sort of the game plan. Any questions you want to tell me in the chat? Yeah, 75 is the passing requirement for both attempts. There you go. Hey, sure. Yes, national first, state second. Each. Yeah, 75 for each. Same as the PSI. Would be really pretty much the same deal there. And for PSI, by the way, you will You'll have to go there. Obviously, you pass the class exam, then you can apply to the real estate commission first for $100, and then they will clear you to talk to PSI and register for that exam for another 56, a total of 156. 100 goes to the commission, another 56 goes to the PSI. Then you'll go to a PSI testing center and they'll walk you through it and see that you follow the rules and have no cheating materials. And you sit there in front of a computer and do something very similar to what you're doing now, except the sandwiches are further away. So, yeah, sure. Exactly. Great question. Great question. So if you pass either of them, you're good on that one, all done. If you fail the other one, then that's the only one you have to retake. Same for both. For both class exam and PSI, same deal. We got into some pretty good math. There was it's all there on the video, and we'll do some more of that when we get to the review section. But for now, let's start hammering through the rest of this. Oh, there it is. Content. So we're going to start with insurance. And, okay, good. That's the one. Insurance is pretty short. It's just a little, about an hour and 15. And we're just going to get into flood zones, the types of homeowners insurance, and just some basic concepts and terminology. It's pretty much all level 1 for this. But again, that doesn't mean that wouldn't be a question that you could easily get to pass, right? So whether it's level 1 or level 3, they all count the same points. We're going to talk about terminology, types of homeowners insurance, and co-insurance. And we've seen insurance already in this class, haven't we? Tell me some types of insurance we've run across already. Yeah, homeowners insurance. We're going to talk a lot about that tonight. We talked about how much that is and how on the closing statement, they charge you for the first year's homeowners insurance policy. Title insurance, that's a good one. We also talked about private mortgage insurance premium, right? So mortgage insurance, title insurance, and now homeowners insurance. You might also see it referred to as hazard insurance. I tend to call it that when I'm not really thinking. So the one who is insured obviously is the homeowner. And who is it that requires that property be insured? Who's really leaning on the homeowner requiring them to get the insurance? Yeah, their lender. It's a requirement. Hey, the lender says, hey, homeowner, I'm going to loan you $800,000. You better keep insurance on it and want to make sure you pay it. So we're going to tack it onto your payment, PITI. Make sure that last I is on there. The premium is the consideration. So an insurance policy is a contract between you and the insurance company. And a contract involves promises and consideration and the names of the parties and all that fun stuff. So the premium that you're paying every month or every year is the consideration in exchange for them covering and offering that protection to the property should it have to be paid out. Gosh, did you see this past week in Mooresville? Some of you might be local and saw it. It was a football player, NFL guy, I believe, and his house blew up. Not even sure why, but his dad died in the explosion. Big fancy Mooresville house, 3-car garage. Just looks like there wasn't enough lumber left for it to have ever been a house. But that insurance company They'll send an adjuster out there, somebody to verify and see what all went down and see if they're going to pay out, right? So that's the sad part of the business. The insurer is the company. They're reimbursing the owner. And why would an insurance company pay out? Well, that's the gamble. That's the risk. How often does a house blow up, explode, burn down, flood? Not as often as it doesn't. So the insurance company weighs that risk and requires certain things. What sorts of things might an insurance company require of the insured? Anybody run into things that you think might be crazy or not crazy that an insurance company might say, we'll cover you, but you could void the coverage if you don't do such and such. We're going to talk about some of that too. Anybody run into something like that? What comes to mind? You might have heard some war stories about coverage maybe not being covered. One thing that comes to mind for me are dog breeds. Sometimes the insurance company says, here's our list of like 8 or 10 dog breeds that through statistics and facts in our experience have led to more claims about dog bites and attacks and things, whether you like the breed on their list or not. But some of the breeds I've heard about are chows, pits, Rottweilers. I mean, I've known plenty of cute fluffy dogs that bite worse than any pit bull I've ever met, but it's all about risk for them. The movie Along Came Polly with Ben Stiller, Jennifer Aniston. He's an insurance adjuster, super OCD, as I would imagine that might be a good trait for such a person in that role. And you're always looking at the numbers, the stats, thinking, what are the odds? Always thinking about the odds of this worst case scenario happening, because that's expensive. There's a lot of add-ons to the insurance policy you can get too, for things like guitars, motorcycles, or collectibles, books. So we'll talk a little bit about that too. You're basically transferring the risk of loss from yourself as the owner to the policyholders affiliated with the insurance company, right? It's absorbed by the group, and they're gambling that what's the worst case scenario? Well, it's probably not going to happen. But if it does, it won't happen to every single one of the policies. We've got something called casualty, which are losses caused by damage to the property and improvements to the property. I think I've mentioned once before about a listing I sold that was in a flood zone, and the garage, of course, is on ground level, but the house is about 5 feet up. You have to go up several stairs to get to the front door of the house, and it's a good thing because it is firmly in a flood zone, and maybe once every couple of years, I still know the owner. She's an agent. She bought my listing. She was a buyer and her own agent, and she's okay with it. But when it does flood, it comes almost, it never seems to go inside the house, but it does flood the crawl space. It knocks the fence down. The patio furniture ends up across the yard, and there's big water marks halfway up the garage wall, and the heating and air unit in the crawl space gets fried every time. So she's got to just file the claim. It gets replaced, and she moves on. I would think you would just move it. If it happened more than once, I'd be like, can we just not do this? Or she might be thinking, hey, I get a new HVAC system every couple of years. So she might just be playing the odds in that way. And then liability is loss or damage caused to third parties or their property. So it's a combination. This hazard homeowners insurance is a combination of both casualty and liability to make up a package policy for both. Because if you're a homeowner, you want your stuff and damage to it to be covered, but you also want it just in case that family, that friend, that little kid that comes over, trips, gets hurt. You want to have coverage for that too. So what's covered? Well, the HO policies are numbered, and we're not going to deep dive into all of them. The very most bare bones policy is an HO2, Homeowners 2 policy, but it's not enough for a lender's satisfaction. The minimum a lender's happy with is a 3. HO3 is going to be the minimum a lender is going to require. And if you have questions, if more specifically your clients have questions about these different policies and what they cover, what should you say to them? If they say, hey, buyer agent of mine or listing agent of mine, I have a question about insurance. What's your next move? 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 What's Everybody's shy today. Yeah. Your next move is to zip it. Not really. Your next move is to say, let's talk to the insurance agent. I'm not going to give you insurance advice because I am not an insurance agent. Yeah. Point them in the right direction. Stay out of it. Even if you know the answer. Eventually, you're going to know most of the answers because you will have run across them in the business. But that's the hardest part. Even though you know, don't tell it. Don't give them the answer. Make them go to the source that has the insurance of their own, right? Employment insurance or errors and omissions insurance. You're not insured to give insurance advice. So point them in that insurance toward that insurance agent. With an HO3 policy, we have an agreement to insure, the contract, right? Anytime there's a contract, there's got to be consideration. We talked about that. And there are deductibles you're paying along the way, or that you have to pay when they pay out. A declaration page that basically says, this is what we're doing. I'm going to cover you for this amount of coverage. It's going to be this and this and this. I just changed over homeowners insurance a couple months ago, and so I had to read theirs and compare it to the one I was leaving and see if it was worth the savings I would be getting, and it was. It was a little less coverage, but I was kind of overinsured with stuff that I really never used and don't really care about, especially considering the house that I'm in and the fact that it's a house that's going to be torn down eventually. If it's the house I was planning to be here in for 30 years, my policy needs might be different. But I realized I'm overpaying and I don't need to pay a big enough premium to warrant all of this. So the policy provisions are going to be spelled out as well. And those provisions are going to be some sort of boilerplate, standard things. And then there's also going to be some that might be customized just for your situation. So we have conditions that might handle specific extraordinary situations for you. Endorsements. Exclusions, maybe it covers everything except such and such. One thing that a lot of policies don't cover are acts of war or terrorism. They're not covered. We don't really have to think about that much here, but what if we were in a situation like Ukraine is in, and that very real kind of stuff? And I guess we do. Some cities, not my little town necessarily, but some of the bigger cities do have occasional things that might be considered acts of terrorism if big groups get together and start doing damage and it extends into neighborhoods. So how does all that play out? You need to talk to your insurance company. If your client has that question because of a riot, one thing that turned into another, might find out too late after the damage is done that it wasn't covered because of what happened. We talked about the clue report for a second, once upon a time, back when we were saying, what was it? It was talking about synthetic stucco, if the house ever had any, and maybe the clue report is a way to discover that. Well, the clue report, if you recall, stands for Comprehensive Loss Underwriting Exchange. It's sort of like a credit report for your house, for your insured house. And the insurance company looks at the clue report when they're deciding to issue coverage for you. But the sellers have the right to their clue report every year. So how does that matter to us as a broker? Well, as a buyer agent, let your buyer know. If you're particularly concerned about a thing, maybe we need to ask the seller to provide the clue report and just check. I think it goes back 7 years, and see if there were any major claims brought against the property that might give you a red flag that would possibly cause you to want to walk away from this during the due diligence period, right? It might be just a good standard thing you do. It's not required, and I don't think it is the standard for most people. But certainly if your buyer has a concern about something like synthetic stucco or leaking polybutylene pipes, that might be another thing that was such a big deal, turned into an insurance claim. It might be something that happened as recently enough, 7 years, that it shows up. So your claims history on that given house could determine how much the insurance company charges for the premium. It might be like, oh, that house is a problem child. Look how many claims they've had in the last few years. We'll cover it, but not normal coverage. We're going to want to put more on it because apparently there's some recurring problems going on. Maybe it's like a basement wall that keeps leaking and having damage and having water issues that pop up, and they still haven't gotten to the bottom of it because several claims have been brought against it several times. Could be anything. So that before, if you know, think about it, if you were the insurance company, that's pretty good business to be in because somebody's going to give you their money and you get to do stuff with that money and put it in other investments to grow for the infrequent times that you actually have to make a payout. In the meantime, that money is growing. And maybe by the time you do have to make a payout because of some damage or storm damage or accident, you've doubled it or increased it in some huge amount. So if you can start an insurance company being the insurance provider might be a pretty good deal. It just depends on the thing you're covering, right? That homeowner's insurance premium could cause the borrower to lose loan approval. True or false, or yes or no? In other words, if your buyer is checking and shopping for insurance and they find out, wait a minute, because of all the various claims, or maybe a recurring situation claim over the last few years, we keep having this claim pop up, and so the insurance company is going to charge me like double what I was planning it to be. Could that cause a buyer to choose to not move forward during the due diligence period? Yeah, for sure. It affects the payment because it's a PITI, principal, interest, taxes, and insurance payment. And if that insurance portion is significantly higher, sure, especially if all those other PI and T are already maxed out. That one with the agent was the buyer of the flood property. It was $300 a year on top of everything else just for flood insurance alone, not including the homeowner's insurance. And that's okay. But the thing is, it was only because of a North Carolina government subsidy that it was limited to the $300 a year out of the pocket of the owner. If it weren't for that special program, it would have been $3,000 extra dollars a year. Now we're talking about a level where the buyer is like, I don't want to buy this anymore. And that literally happened, right? Because that particular buyer, the agent, she talked to the insurance company and ticked them off somehow in her conversation. And I talked to them when I found out that she was backing out of the contract because she couldn't maintain that policy or that subsidy program. So she's going to have to pay $3,000 a year instead of $300. And I got on the phone real quick. And I said to that insurance company, what went wrong? What's the problem? Why can't you do this for her that you did for the current owners? And they said, we don't want to deal with her in the event of a claim. I don't know what happened in that conversation. I wish I had a recording of it, but she caused them some concern. And so her reaction to me as the buyer was, I'm not buying the house because I'm not going to pay the extra $3,000 instead of $300. I'm like, well, you caused the mess to begin with. But we got it sorted. We held it together. Would they lose loan approval? Maybe. If they couldn't afford it, and that lender requires the insurance as part of it. Got to be paid. So it's sort of all big package deal. Therefore, borrowers should investigate homeowners insurance during when? The due diligence period? Yes or no? You bet. Encourage your borrower. And I find this is something kind of forgotten about, kind of on the back burner. By the time you're getting and dealing with inspection-related things, maybe multiple ones, the loan process, of course, negotiating the repairs, the appraisal, insurance and surveys tend to almost get left behind, or at least handled later in the process. But a good agent wants to make sure we remind the client, look, you need to check on those things too, because that insurance rate might be something that you're not happy with for this house. It's just going to depend. I had one client call me one time and said, everywhere I look, this particular company's insurance quote is like 2 or 3 times the others. I'm like, well, just pick the others. But they were curious, and they did pick one of the others. But then I happened to run across somebody who worked for that same insurance company. And I told him, I had a person who was shopping around and they found that yours was significantly higher. And he was like, yeah, it's because we don't want to write any of those right now. And I never thought about it before. They're in a business where they offer auto, home, motorcycle, whatever else. And they had plenty of home policies in that moment. And the only way they could kind of maybe slow down the home policies was to just overprice them. And sure, I'll take it if you want to pay me double, but by charging you double, probably going to scare you away. And that's okay with me because we need to build up our auto side or our motorcycle side or whatever it may be. So it's just a business like anything else. But you need to encourage your buyer to investigate that in the early stages. Here's another big one. Between whether it's unoccupied or vacant, what's the difference between unoccupied and vacant? There is a difference. Vacant, what's the guess? Give me your best guess about what the difference in unoccupied versus vacant might be. One is more empty than the other. Which one's the most empty? Yeah, the vacant one is like straight up, you're not going to be able to live there. You'd be camping out on the living room floor. There's not enough belongings there to sustain living there. Unoccupied just means it looks like you moved out for a week or two. And sometimes that's the case. And so what does the insurance company care about this? Well, statistically, because with them, everything is statistics and the numbers game. So properties that are not occupied tend to have a proclivity toward maybe getting vandalized. Maybe if there's some leak that happens, it doesn't get caught because nobody's around to catch it, and it gets worse real quick. Might have mentioned my friend who gave her neighbor the key to check on the house, water the plants. And it turns out, in looking back, shortly after she left on a Friday evening, apparently the water supply valve at the master bathroom toilet sprung a leak. That water supply valve that you can turn on and off, it just popped. And so between that Friday evening and Saturday morning when the neighbor came in, it had drenched the ceiling below, which was the kitchen. And now the kitchen ceiling was the floor. And that little bit of moisture, with all that moisture, that little bit of time was enough time to be concerning about mold starting to form. So it wasn't just that the kitchen ceiling needed to be replaced. Now they had to get the mold remediation team in there. And it turned into a 6-month project. What are you going to do when your ceiling is gone for 6 months and you have mold? You can't live there. You got to move into another place. Now that automatically just skyrockets the cost of remediation here. So that insurance company had to pay out for a place for her to stay, for all the damage and the whole process of getting quotes and repairs done. And obviously she's keeping an eye on it. They're sending people that are unrelated to the whole thing. They're just the vendor who's doing the work. And it goes back to this. The insurance company finds out that the property's vacant and the owner didn't tell them that they were going to move out. And then it does get damaged. The insurance company finds out because that investigator's good. They're like, wait a minute, there's nothing in here. How long have you been empty? Oh, it's been a couple of weeks. Oh, you never called us to tell us that it is now a vacant property. Therefore, guess what? No coverage for you. Oh, it hits hard in the wallet at that point, doesn't it? The coverage is diminished greatly if you don't tell them the deal about the house. Even the unoccupied part. Are you there every couple of weeks? Just imagine if you had a beach condo and you're there you don't want to rent it out. You just go there every weekend or once or twice a month. That's unoccupied. It's able to be. You could just swoop in there 11 o'clock at night and there's all your stuff, furniture, plates and napkins, maybe even stuff in the refrigerator. So you could pick right up and start living. And that's the difference between unoccupied and vacant. Point is, as a broker, tell your client, Is this going to be a thing for your property? Are you going to be moving out to go ahead and get out there with the spouse at the new job multiple states away? Oh, I'm still back here handling the sale. Well, then you need to talk to your insurance company. Make sure you have adequate coverage for the situation that you're in so that you don't get a nasty surprise if it all goes sideways. Doesn't matter until it matters, and it matters big. So the other big concern for us as brokers is who owns the property as of closing and settlement. What am I talking about here? What could be a situation where another case where we need to talk to the insurance company? Something that could happen relative to the closing and the settlement. What if it's Friday at 2 o'clock, 3 o'clock p.m., there's a delay, and we don't get everything signed until 4:05 p.m. Are we having our closing today? We are not. We had a settlement, but we didn't have a closing. Everybody planned on having a closing, and this seller is a stickler, and this seller says, hey, wait a minute, no money for me means no keys for you. Sorry that your stuff is on a truck. Oh, please let us move in. Could we at least put it in the garage? You hear that a lot. They may or they may not. It's not automatic. The seller's choice. And the seller needs to think about this. Well, if I let them move in early, even just to put their stuff in the garage, we better make sure the insurance coverage is accordingly adjusted. First of all, make sure as a seller, as their agent, that you tell them don't cancel your policy. If you had it set up to cancel today, call them back. Push it to next week. Just tell them that you'll call them when it's time to cancel it. Don't even tell them Monday, just in case. And then as a buyer, if they are allowed to move in early, they need to have coverage for their personal property. What is that called? Renter's insurance, because that's exactly what they are. Hopefully for just the 2 weekend days, Saturday, Sunday. But part of this adjustment of insurance is going to be either a buyer possession before closing or sometimes a seller possession after closing. One of the parties is now a tenant. The other one is a landlord. So as a broker, make sure you tell them to get their insurance coverage adjusted appropriately. It's all about who owns the property and what kind of insurance do the two parties need to get adjusted to. So do we as brokers need to have buyers and sellers contact their insurance company before moving in or out of a property? You bet. You bet. Flood insurance, that's another big one, and this might be a little more likely to have a test question from it. But FEMA is the acronym for Federal Emergency Management Agency. And if you have a question about a property and you're wondering, is it in a flood zone, go to the FEMA maps, fema.gov.gov, and you can find a place where you can plug in an address, and it'll show you the map, and it'll show it to you color-coded. And you'll see, oh, okay, this is not in a flood zone, or this is in a flood zone, which just means if it's in what's called the 100-year flood zone, it doesn't mean it floods every 100 years. It just means it's more likely to flood more frequently in short terms. License law, North Carolina Real Estate Commission license law says if it's in a flood zone, that is a material fact that we must disclose. So it's on our shoulders as brokers to check and find out, is it in a flood zone? What's a couple of ways you can check to find out if it's in a flood zone? Yeah, there you go. The FEMA map, and also a little more of a formal way. It involves another part of the process. Tell me, What might come to mind? What's another professional involved in this process that might be able to answer if it's in a flood zone? You're on the right track, but not quite the appraisal. The survey. All the more reason to encourage a survey early, because that surveyor will definitely run across this. That's one of the many things they check on too. By the way, before I get too far away from this, HO3, HO4, and HO6 types of policies in your book should be around page 353. You'll see those various types. And the HO4 is the renter's policy. So if your client is going to be a renter, that's the policy they would need. It just covers the belongings. HO6 is the condo policy. A condo is a very unique unicorn type of property, isn't it? It's a hybrid. It involves common area owned by all the co-owners as tenants in common. And then it involves the painted surface to the painted surface. It's sort of like renter's insurance, except for owners. So it's going to be the belongings, the personal property, and the fixtures inside. That HO6 policy is for condos, and the 4 is for renters. If it's for a specific property, let's see, where did we go here? If it's for extra things, that would be an endorsement. You'd use an endorsement when they write the policy. They would include an endorsement that says this person has a book collection that they also want coverage. And a lot of times that extra coverage is remarkably cheap for what it is. It's just an add-on, but make sure you do it. Advise your folks to do it if they have something like that. For guitars, instruments, things like that. There could also be an exclusion, something that's not covered. I think we talked about that already. The HO3 policy is by far the bare minimum that the lender is going to require. So what does that mean for us as brokers? We just have a duty to discover and disclose. Is it in a flood zone? Point your clients in the direction of the insurance person, and they can ask their questions from there. You need to recognize red flags, maybe see some mud marks on the walls, exterior walls of the house, or like it's a walkout basement, or maybe a detached shed, and you see any kind of signs of water. Anytime, what I do is anytime there's a creek, a little stream, even if it's a dry little stream bed nearby, red flag. What happens when it rains? There's a park in Concord called Dorton Park, and if you were to stand down into the creek, at the bottom of the creek, you couldn't even see my head, and I'm about 6 feet tall. It's that deep when it's not raining. But if it's rained for a couple of days, because it kind of bottlenecks a little further up the way, it comes over the banks, rises 7-8 feet, and floods the soccer field by like a half a foot or a foot of water. Kids will get out there in kayaks and canoes sometimes until they get caught. So it could be that kind of a thing. Doesn't look like anything, but then a couple of days straight of solid rain makes a big difference. So anytime there's a stream of any sort nearby, back corner, it might be that the flood property is literally, the flood plain is just the back corner. And so here's the question: does it require flood insurance? And as a broker, that's your question. Hey, listing agent, do they have to pay for flood insurance now? No, they don't. Okay. Or do they pay? They might be paying for flood insurance, but it's not required. You need to get to the bottom of that. It might not be required because it's only that little back corner. but they just want the extra peace of mind, and so they choose to pay it. But if your buyer is trying to cut costs and they're willing to risk it, and the lender doesn't require the flood insurance, that might be a way to save a couple bucks. And you just need to give them full disclosure. So here's the scoop. There is a flood zone, but it's just on the very back of this 2-acre parcel. It has never reached all the way to the house, and insurance is not required, but you can get it if you want to. Or the opposite, it is required. So we need to factor that in on top of all the other expenses. This is going to be a recurring expense you're going to have to pay. Principal, interest, taxes, insurance, flood insurance, and private mortgage insurance. It might be an HOA and another HOA because it's a townhome. It could be just a laundry list of things, right? So just discovery and disclosure is the main thing there. So which of the following is a material fact? The seller maintains FEMA flood insurance, or that the property is in a FEMA flood plain? Which one is material? You got it. Just that it's in the floodplain. You got to tell them about that. It might, but even though it's in a floodplain, insurance might not be required. Those maps can be revised over time, so always need to look at them nice and new and fresh every time, and be careful. If the seller currently has flood insurance, then the buyer must continue the flood insurance coverage. True or false? Yes or no? You got it. Yeah, it depends. It just depends on if your lender requires it. If your buyer has to get it, might not be that they have to. Might not be definite 100% requirement. So get all the information. Keep in mind the standard contract that we use says the risk of loss for damage to the property is on the seller. So what happens if property gets destroyed while we're under contract? What way do we proceed if the property burns down or blows up while we are under contract? Whose decision is it as to what to do about that? Do we go through with closing? Is it automatically a canceled contract? Does the seller get to decide? Does the buyer get to decide whether to go through with it? What if the seller is only selling because the house itself no longer meets their needs, but they're sad about leaving because they love the neighborhood, the lot, the area? And let's just say, let's paint a very unrealistic scenario, and nobody's home. They just moved all their stuff out, so they didn't lose any property. They didn't lose any lives, and the property burned down. We'll just say a nice gentle burn. No damage except the property. No people got hurt. The seller might be thinking, yay, great. In fact, they might be thinking, uh-oh, somebody's going to think we did this on purpose. But it's not for them to decide, is it? They don't get to pick. They might be celebrating too early because they're thinking, oh, good, now we can get the insurance money and build the house that we really want and stay here. But that is not true. The buyer gets to decide. If the buyer wants out, they can get out. But if they want to go forward, they can get the insurance payout themselves and they can rebuild. It's the buyer's choice in the event of property being destroyed. I think we've hit most of the highlights here. This one goes down pretty quick. The HO7 and HO8 are for bigger. HO7 is an all-risk policy that covers even more. It's going to cost more for that extra coverage too. And HO8 is sort of a special purpose modified coverage when properties have less market value than the cost to replace them. So for older homes, you might use an HO8. So already we're out of our depth. HO8, HO7, HO6, HO5. That's for owner-occupied and structures and personal liability coverage. It's the most all-encompassing version. But again, the HO3 is the very least that a lender's going to require. So just point them in the direction. And here's how it's going to work. They're going to talk to the insurance representative. Maybe your advice to them is talk to your auto insurance provider, because maybe they'll give you a package deal, a discount for the auto and home under the same roof, so to speak. And they are going to put it all together. And once that's who the buyer wants to use, they will send the rider, which is basically the information about the policy, over to the closing attorney. And that closing attorney will add that to the list of many, many things being charged for, including that first year's premium. That's how the attorney knows what that first year's premium amount is going to be, by seeing the rider. So that insurance person will be in touch with the attorney directly. You're not really in that loop. All right. I think that's probably just about the highlights, because it's such a light chapter. Let's move on. More time for review and get on into our Landlord Tenant chapter. Go. Okay, landlord tenant. A long time ago, we talked about freehold estates. Now we're going to talk about non-freehold estates in these only two little old chapters about not owning, but just renting. So it's going to involve the basic characteristics of a lease, the 4 types of leasehold estates, the purpose of the various kinds of leases, and what are the common provisions for a valid lease. Now, here's the thing. This will help you remember this stuff. Equate leases with contracts, right? Because that's all they are. Where a contract for sale is between a buyer and a seller, a lease is between a what? Property owner and a renter. And so if you just kind of think what's required on one is kind of required on the other, what's the version of thing that's in the contract that's also in the lease? And that might help you kind of relate the two. When we get over into property management next, in the next chapter, 16, I'm going to say a property management agreement is comparable to a listing agreement. Because on a listing agreement, it's between the owner and the agent to help them sell it. Property management agreement is between the owner and the agent to help them rent it. So you can kind of draw some parallels there, and that might help you with memorizing things. So let's look at a couple of pieces of legislation that apply to everybody who's renting stuff. One of them is the North Carolina Residential Rental Agreements Act. And this is all encompassing. I have some clients, past clients, also friends, who moved into a rental townhouse last year when I helped them sell their house. They just wanted to sell while it was at the top of the market. Well, guess what? They had another year to go. But they did go ahead and sell it, and they've been renting, and now they're going to re-up and rent for another year. But their AC stopped working. Their air conditioning stopped working in part of the house, so the bedroom, the main bedroom, is hot. And I guess it's the part that's furthest away from the main unit. And the landlord just had one little person come out and give a quote, and he said $3,000. So the landlord said, we're not spending that. Done. And this was all just between them and the landlord. I had nothing to do with this at all. And I found out about it later. And I'm like, wait a minute. They just told you no. And they said, yeah, they said no. They're not going to fix it because it's too expensive. So we went ahead and spent $300 on a window unit just for the master bedroom. And me being the scholar that I am, I'm just kidding. I only know this chapter about rentals. But I know enough to know that there's this thing called the Residential Rental Agreements Act, which, as we'll see in a minute, is basically all about safety and habitability. It basically says both sides have to make the property safe and habitable. And it doesn't sound too safe or habitable if it's 98 degrees outside and 105 inside, and the tenant has a heart condition. My buddy has a heart condition. He's 70 years old. His wife's worried about him. She didn't even want him to mow the postage stamp courtyard of the little townhouse. That's why I'm going to do it tomorrow. It's like nothing, guys. We could all do it individually with a pair of scissors, but poor guy, he's had like a bypass and stuff. He should not be living in an overheated house. And in the winter, it's going to be the opposite if the same problem affects the heating side of things. So I told him, I'm no attorney, but send me the lease that you signed without me. And I did not get paid to be a part of this transaction back then. But I did help them sell the one that they sold in order to end up being a renter on this one. And they sent it to me. It's like 2.5 pages. And I skimmed it. I skimmed it and I found a paragraph that said, well, let me see. Let me see if I can find it right now. Heat of the moment. Texts. There it is. I might have to come back to it. But it said basically that it's the landlord's responsibility to fix the heating and air system. I mean, I'm no attorney, but that looks pretty, at least worth a talk. And I won't be involved in that talk, but I did point it out to him. And I said, why don't you point this out to them yourselves and see if maybe they say something and kind of couch it. And the next step would be get an attorney to write a more threatening letter, because it does sound like it's a violation of this thing that we're going to learn about today. Another one we'll talk about is the Vacation Rental Act. What do you think that applies to? The Vacation Rental Act. Ooh, that's a good one. Airbnb, I'm not sure, to be honest, because that's such a new thing in the market. It's still relatively new and definitely short term, right? A little 90-day kind of short term condos and things. You literally rent vacation homes for that little duration. So you actually have a place you live, but you're using this for a little vacation duration. Not sure where Airbnbs fit into the mix. That's what the commission has said. We don't know yet. We don't have enough case law to figure it out yet with a lot of this Airbnb stuff. We're going to talk about the rights of tenants in public housing and also under fair housing laws. Frankly, the violations of fair housing laws probably happen more here than in sales, sadly. Because if you think about it, the most flaming, brazen, awful, racist, prejudiced person, if they're selling something, might be like, I don't care who buys it, just give me the money. But if they're renting it, they're still the owner, and they might reveal their true nature in who they pick. It might even be that very first one on the list that we'll learn about in fair housing categories, familial status. A lot of times they say single occupants only, one person only. Oh, you just violated familial. What if they have a kid, right? So you see fair housing violations there because of that sort of thing. And we'll look at the major provisions of the standard form that we use for a lease. I believe it's about 8 or 9 pages. It's not a lot of blanks in that lease. There's a lot of printed words, not as many blanks as there are in a contract. So it's got a lot of provisions built in to kind of keep things fair between the parties. So we're talking about a lease. It's another version of a bilateral contract, not for sale, but for rent. So it's transferring part of the same stuff, not all the same stuff. It's just transferring the right to possess the property for a time. You don't get to own it. You don't get to choose to sell it. You may or may not get to choose to lease it out to another person. In other words, sublet it. Sometimes you can. You got to read the lease and see if they'll let you sublet it. Thankfully, the only time I leased commercial property was years ago when I left a firm because I was mad at them, And I said, well, I'll show them. I'll just go around the corner in the same complex and rent some space. And I didn't need that space. It was a foolish decision. And I committed to a 3-year lease. And after about 1.5 years, I realized this is dumb. I don't want to pay this rent anymore. And my neighbor next door, CPA, I'll never forget him, Satyapal Puri, he was expanding around the time that I was deciding I was done, and he sublet it from me. He became the subleasee. And he didn't pay all of it, so I just slowed the bleeding down a little bit, but it did help the cause so I could get out of there. So we're talking about possession. And so what's going on in a leasehold landlord-tenant situation is 2 types of ownership interests. The freehold estate, where it's an owner, and a non-freehold estate, where there's a tenant and a landlord, right? So there's both of those things happening at the same time. It doesn't last a lifetime. It's not ownership. It's just possession for a period of time. And there are 4. How many, by the way, before we get into it, before we dig into the non-freehold estates, how many types of freehold estates are there? If you remember that little tree chart that we looked at, how many types of freehold ownership estates did we study all those weeks ago? I'm picturing that chart in my head, and I'm thinking on the far left was what? Fee simple something. Fee simple, the best one if you're going to be an owner. Yeah, absolute. And one more over was fee simple defeasible, because it's defeatable. And then one more over was one of the crazy life estates, pour aut vie, for the life of another. And all 3 of those were inheritable. Then we had 2 more to go. So a total of 5 broad categories that are non-inheritable. One was the conventional life estate, and the other was the marital rights estate. So 5. Here in the leasehold world, there are 4. And I'm going to start in reverse. I like to read magazines backwards. So let's start with sufferance, because that's simple, short and sweet, easy to remember. And an estate at sufferance, what does that sound like? Happy or sad? The word suffer is in it, and it is that, right? We're not happy about this. It's unfriendly. It means somebody stayed past their welcome. You said you were moving out at the end of the lease term, but you didn't. And so now you're a holdover tenant occupying the property illegally. What is probably in your very near future if you're in an estate at sufferance as a holdover tenant? Yeah, that E word. That eviction process is coming soon if it's not already started. And so you failed to move out at the end of the period, stop paying rent, and that landlord wants you out of there. But they can't just kick you out. As we'll see in a little bit, they can't just lock the doors, change the locks. They can't run you out by turning off the heat or turning off the power. They can't shut off the water. They can't intimidate you or threaten you. They have to go through a very specific, certain process to get you out of there, even if you're the one who's not doing the right thing. So we'll learn about those in a minute. But that's it for a estate at sufferance. It's just what happens when somebody stays past the time they're supposed to be there. The opposite of that is a very casual, informal, hey, everybody just get along, like I'm thinking Woodstock in the 70s, right? Hippies, just peace and love, man. Let's just all get along. And it's sort of a thing where maybe the tenant is like, I just need a place to stay for the indefinite future. And if you need me to leave, no big deal. Just let me know. No harm, no foul. The landlord says, great, because I'm going to put it on the market, and I might need you to leave with like a couple of weeks notice because we're going to close on it. That's cool. Whatever. It's all good, right? So an estate at will is a friendly version, informal. Either party can terminate without notice. They're just helping each other out in this moment in time. No big deal. Those are the 2 extreme ones. Then we've got the 2 that we're more used to. And one of those, here's the confusing part. I hate the names. I wish I could change the names. One of them is called an estate for years, and the other is called a periodic tenancy. So let's dig in. An estate for years is a terrible name because it has very little to do with actual years. It could be for any period of time. You would think they would have called it an estate for time, but they didn't. It's called an estate for years. Any period of time could be days, weeks, months, or years. It could also be called an estate from year to year, or just an estate for years. Anytime you see the word year in estate, you know, okay, there's a duration involved here. And here's how that looks. There's a definite ending date to go along with their beginning date. There's a beginning and an end. It terminates without requiring notice. But if you think about it, duh, there's an ending date spelled out. So why do you need to give notice? Because you already did by putting in the ending date, right? And as such, it does not automatically renew. You don't just go along and wait, and oh, we went past the date, but it's okay. It did not automatically renew. You are over. You're done. You got to get out of there. So an estate for years or an estate from year to year, it's just some amount of time. Beginning date, ending date, both are listed in the lease, and it terminates without having to give notice of termination. And it does not renew automatically. The other one, the last of the four, is an estate from period to period. This one says it's going to be for this initial period. We're just going to start and do it for this amount of time. As such, it's going to keep doing that over and over unless you shut it down. So there is a required notice to terminate. Otherwise, it's going to keep automatically renewing. If no notice is ever given, it'll keep renewing. How much time do you have to give as notice? Well, that depends on how long the lease is, as to how much notice you have to give if you're going to terminate. And it looks like this. North Carolina law has minimums in place. It says to terminate a periodic tenancy, if it's a week-to-week duration, you've got to give at least 2 days notice to terminate. If it's a month-to-month duration, you got to give at least 7 days. And if it's a year-to-year, like a 12-month lease, you've got to give 30 days. Anything sound familiar there? You have to give that kind of notice? Yeah. So that's it, right? That's the estate from period to period. It requires notice by law, certain minimum amounts of notice. So you do need to be familiar with this slide pretty good. And I have put that slide in the bundle, I believe. Pretty sure I did. Let me know if you notice otherwise. I just also put it there in the chat, just for fun. So notice, we're going to see in a minute. We haven't gotten there yet. But both the notice to terminate that we just saw and the security deposit that's required, how much am I required to put in for a security deposit? Both of those things depend on how long the lease is for. So we're going to compare that when we come back from break. I'll see you back here in 10 minutes.
If you are looking for new construction, active adult communities in the greater Charleston, South Carolina area, then stick around. You're not going to want to miss this video. I am highlighting 6 different communities here in Charleston that are active adult, meaning they're 55 plus. You have to be at least 55 years old to live here. They are all new communities, so you can get a brand new home in $300, $400, $500,000 price range. And you get incredible, luxurious amenities as well. So each community has its own awesome features. We're going to get into that right now. So if you're interested in any of these downtown and other
The Four Seasons asked them, can build the Four Seasons part of his home, the Cane Bay community? Okay, so the homes here start. This is a and stainless and tennis and
that wraps up construction, or even if you are, there's tons of tidbits in there.
Are you considering?
If you're looking for new construction, if you're looking for that instead of single family, which of these active adult communities was your favorite? Now, this was not an exhaustive list of all of the communities here in Charleston that are 55 plus. There are some others. There's also a couple that are apartments or condos if you're looking for that instead of single family. So if that's of interest to you, please reach out to me, and I'm happy to get you a full list of all of the communities here in the area that meet
All right, let's see here. So let's look at one more thing. There we go. There we go. Since we were talking about it, let's talk about the other thing that's related to time, and that is the money. Sorry. I know. Sorry, had it muted. I never do that. When I do, I always forget to unmute. Thank you. All right, let's take a look at this first, and then we'll catch up a couple of other slides back. Since we already mentioned this is the other of the two things that depends on the duration of the lease. How much security deposit is required? You can't just collect as much as you want as a landlord. There's a cap on it, right? What's it there for? It's all governed under the Tenant Security Deposit Act. And the owner or landlord must either put what are we talking about? This security deposit. This is more money collected from the tenant, right? It's the tenant being willing to set aside their own money in case, sort of as a promise. I'm going to leave this place the way I found it, is the idea. You might have stories of, well, they took my money and it was in great shape, but they took it anyway. They wouldn't give it back to me. But the idea here is just as a safety net in case the property is not returned in the same condition, then the landlord has a case that they can make that they should keep all or some of it. So where can they keep it? It's other people's money, so it's got to be kept either in a trust account or they would be bonded for it. Basically take out a bond for it so that they have that money available if needed. If you're a real estate licensee who owns the property that you're renting, then you can't use the bond. You have to put it in a trust account. The bond is not an option for you if you're an owner with a license. But here's the durations. The amounts. The very most that a landlord or an owner could collect from a tenant for a security deposit depends on the duration. If it's a week-to-week lease, then the max they can collect is 2 weeks rent for security deposit. If it goes month to month, the most they can collect is 1.5 months. And if it's greater than month to month, then the most they can collect is 2 months rent. So the minimum termination required and the maximum security deposit are both dependent on how long that lease is running for. We have a couple other kinds of leases. We talked about the estate at will, which is friendly. We talked about the estate at sufferance, which is unfriendly, holdover tenant. Let's talk about a couple other lease types. A fixed lease means you're just paying rent as the tenant. The landlord is paying the expenses. Your expenses as a tenant only for rent, not expenses. Here's the stuff I've seen on practice exams, the difference between a percentage lease and a net lease. Percentage is about income. Think about in a commercial property. If you're running a hair salon and maybe you pay rent based on how much profit you do in any given month. So the better you do in your business, the more rent you have to pay. Who likes that plan? What about if we word it the other way? What if you have a bad month? Guess what? You don't have to pay that much rent. That sounds a little better. So you might see a calculation problem to that effect. But in a percentage lease, the tenant is paying a portion of rent based on their income or profit. Let's see how that might look on the test. Could be something like this. The tenant has a percentage lease which says that they're going to pay, it might be a base amount, a base rent of $1,000, and then a percentage lease, that's supposed to be a percent sign, which is a percentage of, let's see, 1% for anything over monthly income or monthly profit of $10,000. And in a given month, let's say that you did $12,000 profit. I have no idea if these numbers are realistic, but how much rent would this person be paying for this given month? Well, it's definitely going to be at least $1,000 because that's the base. It's always at least $1,000 in this case. And then how much was over the minimum profit? If they made 12 and the minimum was 10, well then $2,000 was the amount of profit over the minimum that's in the lease, but 1% of that, $200 on top of the $1,000. So $1,200 would be that rental payment. It'd be something like that, but probably bigger numbers in real life. But percentage, I show you that problem really just to maybe give you a memory aid so you can think, oh yeah, he calculated it. It was a percent of the income. Because when you see the word percentage, I want you to think percent of what? Income or profit. So my rent is based on how much I make. I like that deal because I'm thinking of the other direction. If I don't make as much in a given month, maybe I have a bad month. Well, guess what? At least my rent will be less, right? Sort of like real estate. May not have a sale this month, but at least I don't have to pay as much of a split to the firm, right? A net lease is based on expenses. The tenant pays maybe a base amount, maybe not, but also a portion of the expenses. What expenses? Well, think about if it's like a 4-story office building. You ever seen one of those in like an office park? We used to, when I taught in person, live and in person, everybody breathing the same air. Frequently, it was in Huntersville off exit 23, back in a very nice office park in a relatively new building, had nice chrome sort of features and highlights in the elevator lobby, and it was newish, right? It was relatively within 5 years old. And it was out of a conference room at a real estate office in there. So there was like an adult education, sort of a correspondence type college that was based out of there. There was a medical business in there that didn't need too much typical medical related things, just sort of a basic one. There were like maybe a little CPA, couple person CPA outfit. So that kind of place. Well, if they had a net lease, that would mean they are all sharing in the expenses. Part of their rent individually is based on sharing the expenses. What does this word TICAM mean? Yeah, there you go, Victor. The word TICAM. What else have we seen? What other acronyms have we seen the letters T and I? And what other place in this course have we seen the letters T and I as part of the acronym related to a payment? There you go. Same words. For this, expenses, taxes, insurance, and common area maintenance, TICAM. Very typical acronym in the world of commercial real estate. What's the TICAM? How much for taxes, insurance, and common area maintenance? That's being split, portioned out. Maybe the big school that has the entire 4th floor is paying a bigger proportion because they're using a bigger portion. And maybe that little 2-person accounting firm, it's like 2 little office spaces down on the 1st floor, basically a closet in another room. They're not paying as much of the TICAM. It's a proportional amount to how much square footage they've got. Maybe it's set up like that. But that's essentially what we're talking about. What you need to remember is a net lease, net of what? Net of, think about like that given acronym. Gross income minus vacancy, and then finally minus operating expenses brought us down to net operating income. So the word net has to do with expenses. So a net lease has to do with expenses, paying a portion of the expenses. Percentage lease is a portion of the income. And then a graduated lease is something that's going to start lower and increase over time. Graduated amounts, rent is increasing at predetermined intervals. So maybe you're just a brand new business starting out. That first year, they say, well, the typical rent's going to be $2,000, but we'll let you pay $1,700 the first year. And then next year, $1,800 a month. And then the next year, up to the $2,000. Some predetermined interval that starts lower. They kind of let you get your feet up under you as a business, right? So just know those basic terms: graduated, fixed, percentage, and net. Some other types we might run into out there are a ground lease. Ground lease. You could think of this as sort of a mobile home park, because frequently somebody might actually own the mobile home they roll onto that lot, but they're paying for the dirt in rent. They're leasing the lot. Whenever they move, if they own their own mobile home, they're going to truck that mobile home off the lot, and then the owner of the whole park is going to stick a new renter in there. Maybe they've repossessed a mobile home because they owned one, or maybe somebody got foreclosed and they bought it, and somehow they put their own mobile home, and now they're going to rent that and the dirt. But a ground lease is just leasing the ground. And I think in other countries you see this a little more commonly. I've heard of churches raising money, and they say, well, down here, like in South America, certain countries, we don't own the lot, the land, but we're raising money to build this church, the structure that's going to go on it. And at first, as Americans, we're like, well, I want to own the dirt it's on too, but that's just not the way it is some places, right? You don't own the land. It might be a 99-year lease or a 25-year or some long-term lease, but you're renting the dirt. You're putting your own structure you own on it, but it's a ground lease just for the land. You own the building, you lease the land. A full service lease means the commercial tenants are sharing in that common area maintenance. What do I mean by common area? In a given, I'll say like an office building, 3 or 4 stories, or even a high-rise skyscraper. What sorts of things? Yeah, hallways, parking lots, elevator. Yeah, the elevator lobby, coffee, lunchroom, vending areas, outside areas. One time I was teaching a post-licensing class, and Monique, I'll never forget Monique. She's a dear lady, super sharp lady, and always wore the business suit. Obviously fit. She'd wear sleeveless, and she obviously had some little deltoid cannonballs on her arms. She went to the gym, Monique did. And she, at a break, I went to the restroom, walking down the hall, and I see feet poking out, and Monique's cranking out about 20 push-ups at every break in the elevator lobby or in the vending machine lobby. So that's what makes me think of common area. I can't quit thinking of Monique doing push-ups. More than I could do at one time. Oil and mineral lease we've talked about before. And I always think of the whole Texas area oil, whatever you call it, like behind the farmhouse where it's just cranking that oil up out of the ground. They don't sell their land to the Texas oil company. They lease it to them for some amount of time. Yeah, suck whatever oil you can up out of there and pay us for it. Give us an oil lease, or it might be a mineral lease. It might be fracking. They're just leasing the space and the access to pull those oil, mineral, or gas up out of the ground. Subsurface rights being leased. Let's get into the lease document and look at some lease provisions. And if you'll think about it, tell me what this looks like. What's familiar? The essential provisions of a valid lease include mutual agreement. Everybody's saying, yeah, let's do this. We agree. Consideration. There you go. Yeah, a contract for sale. Looks a lot like a lease for rent. Yeah, a capacity to contract. It better be 18, sane, and sober. Same as a contract. Legal objective. You better be doing it for a right purpose. If you try to go before Judge Judy and you say, I'm mad at that landlord, he's not doing right. I'm just trying to rent this meth house in this marijuana field, and I want you to make him do, well, I'm sorry, you are both excused. See the bailiff on the way out. You might need to put your business on hold for a minute while you serve your time. Better be for a legal objective. And those essential elements are just like for any contract. What are some typical major lease provisions you might see? What they can do with it, right? If you're renting something out and you're the landlord, and it's especially commercial, do you want to have a say in what that tenant can do with it? Maybe you just sign a very simple lease and you didn't really check on what they're going to do, and they're all of a sudden bringing these big old trucks with these big 55-gallon containers and all kinds of chemicals, and you're like, wait a minute. What is your business after all? You might be asking a little too late. But maybe their business involves chemicals that could get spilled and dumped, and now EPA is concerned. And now guess what? You're the owner. And if something gets contaminated, they come to you first. So maybe you just say, no, you can't do that type of business on this property that you're leasing from me, because I don't want to deal with the Environmental Protection Agency. So whatever it is, tenant's use of the premises would need to be spelled out. Environmental concerns, fixtures. What is a commercial lease related topic we've talked about with regard to fixtures? Think about some kind of fixtures. Yeah, there you go. The stuff that's nailed down, screwed in a hair salon, like the sinks. Those are trade fixtures, Corey says. Which means, is it real or is it personal property? What's a trade fixture? Is it real property or personal property? Yeah, they can take it with them. Even though it's a fixture, it's the kind of fixture that you can take with you because it's yours. You brought it in there because you were going to run your business using it. It's a requirement. Maybe it's a little mom and pop kind of a kitchen or diner or deli. And so it's got sinks, but also ovens and griddles and all the various heavy-duty kitchen equipment. Whatever it is, think about those kinds of fixtures. What about repairs? Non-residential property, there's some provision of repairs being made. Maybe the tenant handles repairs up to a certain amount, like $50. Change the light bulbs. Anything more than a certain level, the landlord's responsible for. And then another one with regard to commercial leases is, what will it take to get that tenant interested in your property to rent yours instead of another? So I also taught in another space. This one was down, I think, off of, I can never remember, maybe Park Road. So an older office building, not the new 5 years or less. This one was 35 years or so. And you knew that just by walking in the elevator lobby. So now instead of chrome and stainless steel, it was what I call granny brass, right? The old yellow brass from the 70s and 80s, and everything was worn, and where people's hands touched certain places, everything had broken tile around the fountain. It was clearly an aged property. And if you wanted to rent there, I bet it was cheaper than the one up in Huntersville, both for location and level of need for condition. But what if when you went on the inside of one of those units, it was very similarly in need of upgrades? One way that landlord could entice a tenant is to say, I know what it looks like now, but if you sign a 3-year lease with me, I will put all new carpet in there, your choice. I will paint the walls. Instead of mustard yellow and hunter green, we'll paint it a nice Joanna Gaines agreeable gray or whatever. We'll upfit it. So a lot of times the upfits are included in the deal, in the lease. We will bring it up to a certain level, get it nice and new and sexy and pretty. And it might be that you've been there for 10 years and you're thinking about leaving and moving on. One thing the landlord might do is, again, let me upfit it, bring you back up to former glory and get this thing more modernized. If you sign a renewal, I will include an upfit to make it pretty again, relative, more modern. So that upfitting improvements apply a lot of times to commercial leases. Tenants are usually required to make ordinary repairs. And if they don't, they are considered to have wasted the property. They got to keep it maintained. And typically, the security deposit ensures that they return it to the condition it was when they started, with allowance for reasonable wear and tear. Remember that phrase, reasonable wear and tear. Some things just are going to get worn over time. Carpet to a certain level is going to get worn. You ever had your carpet down for a year or two, then you move the furniture around and you remember how nice and new and pretty it was because the bookcase is on top of that part? And now your new traffic pattern is kind of showing some of the old traffic pattern and some of the covered up part. So reasonable amount of wear and tear. We're not talking about big holes. Anybody have a pet, like a dog that just chews and tears at the carpet and you've got a big hole and you put that area rug over it because the dog chewed the hole? That would be unreasonable or more than ordinary wear and tear, right? There's a list. And another thing on the list of what's beyond ordinary wear and tear is, surprisingly, crayon marks on the wall. Anybody ever had to scrub those off? I don't know if the Mr. Clean erasers do it, but apparently it's hard enough to do they? Okay, well, maybe that'll fall off the list eventually, but right now they are still considered beyond ordinary wear and tear, and you could lose a portion of your security deposit for that sort of thing. Big holes, crayon marks, like really dirty bathroom fixtures. That sounds disgusting. I'm a sort of a toilet phobe. I don't like toilet related things. I like that they exist, but I don't like to clean them. That's too close. If I could get a 10-foot pole, that'd be better. So commercial landlord might initially customize that lease space for you. Maybe make that little lobby area, maybe put up some walls and separate it the way you need it to. As the hair salon, you want 2 rows of sinks. So you put a wall down the middle so you got some privacy and then a little front foyer area. I helped a little church do a startup and we found the property to rent for them. And it was a former laundromat, which meant it was like 50 by 50 feet inside. One big room. And they needed like a foyer and they needed the main sanctuary and they needed a little sound booth in the back and a little hallway to get to the bathrooms. And so I had a good time kind of marking off those walls. None of it was structural. It was just purely for use. And in this case, the landlord, we negotiated like pretty low rent, but they had to do their own upfit. But we could have, if the landlord required more rent or insisted on a higher rent, maybe they would have said, in order to get that higher rent, let me cover that upfit for you. Let me build those walls. We had some specific needs they needed to attend to, like sound dampening in between the wall panels so that that foyer wasn't quite so loud when the band was cranking out there in the worship area. So it could go a couple of ways, but a tenant might have some say in some color choices, carpet, wall color, and shapes of things, of walls, and how to lay out the floor plan. And again, that landlord might do all this same thing in order to keep that tenant after 5 years or so interested in maintaining and renewing. Oh, I'll make it nice and pretty and crispy again if you renew. Other provisions might be the permission for that tenant to assign the lease to someone else. Maybe they outgrow it and they want to be able to get out of there sooner than the lease term. Maybe the lease term is 5 or 10 years. Some of these commercial deals go pretty long-term lease. But if they do outgrow it, they have the right to sublet it to someone else or assign it to someone else, assign that lease contract. The major provisions are going to include the term of the lease and how the renewal is going to work. Is it going to be renewable? And what happens if you don't pay? What happens if you don't keep paying your rent or you default on the rent? What kind of penalties are you going to get charged for? It might be that you have a built-in option to purchase or right of first refusal. Preemptive rights was the term for both of these things, right? One was first right of refusal and the other was first opportunity to purchase. So option to purchase is not really the best word choice here because if you remember, an option to purchase is for a non-possessory interest. But the right to buy it if the landlord decides to sell it, and you're thinking, I want to rent right now. I'm not interested in buying, but I don't want any other landlord. If you decide to sell it, go ahead and give me something in writing that we can record, and I can have it and know that I can be the first place buyer if you choose to go that route. Or I don't want to buy it right now, but if someone else comes along and makes you an offer, I want to have a first right of refusal so I can have that first position. You can't sell it to them without asking me if I'm ready to buy it yet. So those could be a part of the lease as well. The landlord also has a right, within reason and within a certain amount of notice, to enter and make sure everything's going okay. Make sure it's in decent shape. It's still their property. They can't just come in unannounced, but they do have to give you notice. But it goes back to that covenant of quiet enjoyment. Where else did we see the covenant of quiet enjoyment in this course? Maybe around chapters 14 or 15 about the finance section. Covenant of quiet enjoyment. Someone else has an interest in your property. In that case, you're the owner, they're the lender. And you have a covenant of quiet enjoyment. You don't have to worry about that lender popping in without telling you. They don't pop in at all. In this case, they do. And they are the owner, but they got to give you notice for it. If I were a landlord, I would do that once a month just to make sure nothing crazy is happening. Everybody's kind of being above board. And I would go ahead and change the filters myself for the AC, heating and air system, because people just don't do that, especially tenants that don't care. Why would they? And the batteries in the smoke detector. Officially, you've got to provide as a landlord the smoke detector itself working. But then after 6 months, if those batteries die, it's officially, a lot of times in these leases, for the tenant to resupply the batteries. Well, guess what? I don't want the property burning down because the tenant, or anybody dying, that's the main thing, because the tenant didn't bother to put new batteries in, so I'm probably just going to do it myself. All the more reason to go every month and just kind of, oh yeah, this is the 6th month. Let's go ahead and do the batteries while we're here. So the landlord does have a right to enter, but with notice. Tell me more, Deborah. What you mean in other case meant no cloud on the title? You can. Oh, you're saying the covenant quiet enjoyment involved no cloud being on the title? Yes, you're right. That is true. And Joseph, what do you mean about a warranty deed? And you can type more if you want to. Oh, okay. Right. Yeah, she was talking about the covenant of quiet enjoyment, meaning no clouds on the title, and if they are there, they'll help to extinguish it and fix it, which does fall into line with what you're saying. So yeah, all that sort of bundles in together with what we talked about before. Let's talk about how leases terminate. The parties could agree, let's just not do this anymore. The lease term could expire. We're done. Lease was for 6 months. It's over. 6 months is up. We're done. Terminated lease. It could be that the owner declares bankruptcy or the property gets condemned. That'd be operation of law. It could be that one of the parties breached the contract. Maybe the tenant did something they weren't allowed to do with the property. And it very similarly looks a lot like the essential elements of a contract. Termination of leases versus termination of contracts looks pretty similar. Don't forget about this little nuance with regard to the statute of frauds. Statute of frauds, in order for something to be protected against third party, no, that's the contract, must be in writing in order to be enforceable. Statute of frauds. So what must be in writing when it comes to this lease topic? Leases in excess of 3 years. If you see it on the test, Don't fall for it's a 3-year lease. It's in excess of. Leases for more than 3 years need to be in writing in order to be enforceable. If they're not in writing, it's unenforceable. So, more than 3 years from the date of execution must be in writing, signed by both parties to comply with this statute of frauds. Connor Act kicks in too. Leases longer than 3 years must be recorded to protect the leasee. If it exceeds 3 years but it's not recorded and it's sold, the new owner does not have to honor the lease. Wow. If it's not recorded and it's a lease for more than 3 years, that tenant could get kicked out. Let's protect that tenant by recording any leases that are in excess of 3 years. What about that are already 3 years or less? They have automatic protections for the tenant. You would need this extra one in place to protect the tenant if it's a longer than 3 years lease. And don't forget at the bottom there, as a reminder, those are two very important terms to remember. Statute of frauds is about being in writing to be enforceable. Connor Act is about being recorded to protect against third-party claims. Here's our Residential Rental Agreements Act. Guess what? It's not for commercial property. Residential is in the name, right? So residential, somebody needs to live there safely and habitably. Is that a word? So they must keep the property, keep the units habitable, safe and habitable. Doesn't apply to transient, like short term, like hotel, motel, Airbnb, vacation, bread. I always do that. Bed and breakfast facilities are not under the Residential Rental Agreements Act. They'd be under the Vacation Rental Act, but not this one. So it's all about that habitability and safety. And they both, landlord and tenants, have mutual responsibilities to keep it habitable and safe. If they fail in doing so, the other party's no longer responsible for keeping up their end of the bargain. So what does this mean, safe and habitable? For a landlord, it means keep the premises fit, habitable, clean, comply with building codes, keep common areas safe, wires get exposed, get somebody in there to cover them up again. Make repairs. Oh, there's my little friend. My little friend's in their little townhouse, the older couple. HVAC, need to make repairs to the HVAC. Hey there, landlord. Let's follow the Residential Rental Agreements Act, right? Electrical, plumbing, appliances. A landlord who does not maintain the property could be found negligent and be liable to pay for any resulting injury. Maybe the elevator lobby has a puddle over the light or under the light fixture. Somebody could get hurt there or slip and fall. There are 4 kinds of eviction that we'll cover in this chapter. Out of the 4 kinds of eviction, one of which we'll get to next, but out of all 4 of them, only one has to do with a bad tenant. The tenant's the bad guy. The other 3 are about the landlord being the bad guy. Let's take a look at one. If that landlord fails to keep the premises safe and habitable, what is the tenant supposed to do? It's the dead of winter and the heat doesn't work and they have a kid. Let's just pile on and make it even worse, right? So what can they do? Can they just stop paying rent but still manage to live there? No, they cannot. Can they stop paying rent? Yes, but only if they move out. They would need to say to the court, look, I've tried. They asked them to fix it. They wouldn't fix it. I need to get out of there because I had no heat. It's dangerous. And so I've left. I've evicted myself. I've constructively evicted myself. And so I'm moving out and I'm not paying rent anymore because they let me down. They let down their side of the bargain. I might be 2 months into a 12-month lease, but it's February and it's cold and I got no heat and they won't fix it and I've asked 5 times. So the tenant can move out and stop paying rent. It's called constructive eviction. They are evicting themselves. But they're not off the hook. They have duties too. So the tenant, you'll notice, looks kind of similar. Got to keep it fit and safe. They also have to keep the plumbing fixtures clean. They can't damage the property or they're going to have to pay for it from their security deposit. They have to comply with building codes. They have to remove trash. I think this one happens probably quite a bit. Yeah, throw away the trash. Don't, like hoarders, not welcome, right? And they're responsible for the damage over and above ordinary wear and tear. A major provision for a tenant statutory duty is they can't just stop paying rent. They can't just stop paying rent. There is a procedure in place if the landlord misbehaves. Let's look at the kind of eviction that you're all thinking about. When I say the word eviction, the funny thing is the actual eviction that we think about from TV and movies doesn't even have, the legal term doesn't even have the word eviction in it. That's when a tenant overstays their welcome. They're not supposed to be there anymore. The landlord, it's the only way the landlord can remove them legally, and that's through the court system. And so it's called summary ejectment. It's going to involve going to court, showing proof that they didn't do their stuff. They did something wrong. It's a judicial form of eviction. Does that mean it's fast? Quite the opposite, right? In fact, a tenant who knows the laws could probably milk it for a while and stay in a hadn't been paying my rent situation for longer than 30 days, maybe 60, maybe 90. Maybe they make up a couple of months, but they still stay even though the landlord tried to evict them. Yeah, COVID was a whole different ball game because then we've got landlords that aren't allowed to evict because we had a whole different element involved in this thing. A whole massive health crisis worldwide. So yeah, that probably got some landlords out of the business altogether, I would imagine. So tenants can constructively evict themselves, as we saw a little earlier, and landlords would pursue this method, summary ejectment. This, again, is the only kind where the tenant's the bad guy. Let's look at the other ones where the landlord's the bad guy again. Here's one. If the landlord is just tired of that tenant for some reason, has no good reason to get rid of them, or maybe he does have a good reason to get rid of them, by the way, and just gets impatient, they don't want to go through the summary ejectment process, that court process, which could involve multiple trips to the courtroom. What if they just took the door off the hinges? What if they just changed the locks or shut off the utilities? Well, guess what? They broke the law. That's like basically bullying. That's illegal, and it's called, funny enough, peaceable self-help eviction. Self-help eviction, you might just see it referred to that way. They're trying to help themselves to pushing this tenant out, and it's illegal. They could get into much bigger trouble over that. Big time bad guy behavior. Landlord's not doing right at all there. They're taking action to force the leasee out of the property. There was an apartment in Charlotte, I remember from years ago, that the landlord took the door off. The person got home, landlord wanted them out, so they just took the door off, trying to be like, well, if you want to be safe, you better just go ahead and move out. That didn't go so well. And then finally, the third landlord is the bad guy kinds of eviction is if the tenant is trying to exercise their legal rights, like complaining to a government agency about the landlord, requesting repairs. The landlord's like, I'm tired of you nagging me for this light that's broken, or this heating and air system. So get out. You're out. I'm evicting you. I'm tired of dealing with you. That would be retaliatory eviction. They're retaliating against the tenant by evicting them, and it's also not okay. Not the right way. The only way the landlord can evict the tenant is through summary ejectment. These other three, not okay. If that landlord tries to pull this stuff, the tenant is protected from eviction for 12 months because the landlord tried to retaliatorily evict them. It could be that that tenant was just going to join a tenants association talk about what their rights are and maybe form together and try to get that landlord to do the right thing, or form one from scratch, or again, complain to a government agency. Good question. Anybody happen to know how much evictions cost? I've never had to do one. Yeah. Loser pays court costs kind of thing. Yeah. But don't forget, along the way, as we'll see here in a minute, about that security deposit. Let's take a look at that. What can it be used for? We already talked about how much of it the landlord's allowed to collect. They have a maximum, a ceiling, they no more than. But what can they deduct it from? How much can they deduct from it for the various things that the tenant might do if they didn't pay rent? Maybe it was a 1-year lease and they moved out a little early, a couple months early, and didn't pay the rent. So that landlord is harmed by that. They were counting on 12 months. That was what's in the contract, the lease. So that non-payment for those 2 months could come out of the security deposit. Also, the damage beyond ordinary wear and tear, crown marks, broken windows, things like that. Also, sort of hand in hand with the little scenario I just painted, non-fulfillment of the rental period. Maybe they did pay the rent while they were there, but instead of being there 12 months, they were only there 7. So they're shorting the landlord of 5 months of rent. That could be deducted from the security deposit. And then unpaid bills that might become a lien against the property. The cost of putting a new tenant in there because they moved out a little early and now the landlord's got to re-rent it. And then there you go. Here's the one that I was getting around to. The court cost of an eviction could be deducted from the tenant security deposit. Hey, you made me take you to court. I had to pay some court costs. Well, now I'm not giving you back your full tenant security deposit because I had some court costs because of taking you to court over the eviction. Notice this list is quite lengthy, and the amount that they collected for security deposit may run out. So that's one of the hazards of being a landlord, right? Hopefully the security deposit is enough, but it might not be. It's just part of the deal. Yeah, please. Oh. Holy moly. Oh my gosh. Yeah, you got it. Interesting that they claimed that they never had one from her. I wonder if we believe that. Yeah. How long had she been there? I mean, after you bought it or before you got there? Because I could imagine if she'd been a 5 or 10 year resident, maybe that security deposit was long gone somehow or other. But all of that shouldn't be the case either. It should have been sitting there. Yeah. Why did she leave? There you go. Yeah, it's about time either for her to pay a market rent or to move on to something else. But yeah, that's a real world case if there ever was one. That's hard. The security deposit itself, how do we handle it when it gets returned to the tenant. Initially, the landlord would provide a preliminary statement that would say, look, I found this damage and you moved out a month early and there was this, I had to pay for re-renting. And for these reasons, I'm not going to give you the full 2,000. I'm only going to give you 1,200 or whatever. So that preliminary statement would be required and due to the tenant within 30 days of the end of the lease. And hopefully you get all that resolved, but then the final statement and whatever you are going to give them back, if anything, would be due within 60 days of the end of the lease. So the preliminary is due within 30, the final is due within 60. It might be that there's no dispute, everything's gorgeous and better than ever, so the preliminary, the 30 days is you're done. You give them back everything and it's all finished. But those are the two possibilities there. Can a landlord charge a fee for a pet? Boy, can they. Wow. I'm thinking about that for my own self, and I'm seeing $300 for pet fees out there in the world. And I've got 2 of them. Had to put my old guy down today, by the way. I thought I was going to have maybe 3 dogs to deal with, but 2. But even 2 times 300, that's my brother's. He was really my brother's dog, but I raised him and it was tough. But I mean, 3 dogs, $300 a piece, that kind of gets up there. I remember when it was like $50. What about a service animal? Is a service animal something you would have to pay, or they were be allowed to charge a pet fee? No, not a service animal. We'll get more into that when we come back, but I'll see you back here in 10 minutes. I'm sorry, Kirsty. I remember that. It's the worst. All right, let's come on back together. Okay, let's see. So the landlord can certainly charge a separate non-refundable fee for pets. For service animals, not so much, because a service animal is indeed not a pet, right? They can't charge a pet fee for a service animal. They can't refuse to rent to someone with a service animal. That'd be a violation of federal fair housing laws. If the service animal causes damage, may actual repair expenses be deducted? Yeah, just like if your human friend damaged your property or you yourself. It's just going to fall under the security deposit. Damage to premises, again, ordinary wear and tear is accepted. Small holes, small nail holes from hanging up pictures, but major holes in the wall, fist-size holes in the wall, things like that, big holes in the carpet is the difference. The Vacation Rental Act is another piece of legislation we have to follow. Landlords leasing property for less than 90 days. The tenant would need to have their own primary residence. This is not a residence for somebody more than just a vacation. Here's another little nuance that you might see on the test. If an owner buys a beachfront condo, vacation rental place, then they have to leave the leases in place for 180 days. Any lease in place after closing needs to be honored up to 180 days worth. They can't just kick them out because we're the new owners. Sorry, you planned your vacation. Tough for you. No, they got to honor those leases for 180 days as part of the North Carolina Vacation Rental Act. If you have a tenant in using Section 8 housing, what do I mean by Section 8? Section 8 housing. Some sort of, government assistance, government funding. That tenant applied for that. The government deemed them worthy and gives them either all or some of the rent. Pretty good deal for the landlord because they know they're getting paid, right? So Section 8 tenants cannot be evicted unless there's good cause, even more so. Got to make sure you're not just frivolously evicting somebody because you're tired of it being a Section 8 situation. The tenant would have to be at fault. They are entitled to a procedural process. Got to be for good reason. So Section 8 tenants can't be evicted unless good cause. Fair housing, we'll get into that. Its own section probably tomorrow. No discrimination of the protected classes. We'll see what those are, but I'll give you the highlights now. You can remember the 7 federally protected classes using the acronym Fresh Corn. Anybody run across that in your studies? Fresh Corn acronym for remembering the protected classes. How does that work? We got our F, we RESH. Actually, let me change it. It's a little more appropriate in the latest iteration to say Fred's corn. The acronym pretty much still works, but Fred's corn means familial status. Can't discriminate against a person because they have an underage dependent. Familial status means dependence. Doesn't mean who's married to who. It means underage people in the household. Familial status. Race. That's been around since, as we'll see in the chapter 19, 1860s from the Civil Rights Act of 1860s. So that's been no discrimination on the basis of race with regard to real or personal property for many years. And it's brought forward to this fair housing law as well. If we take the E and the O in Fred and corn and just make those the words equal opportunity, then the remaining 7 letters fit the acronym nicely. So these aren't really things that you need to remember. Those aren't in the protected classes. The protected classes are the other letters besides those 2 words. So what else do we have? Disability. A couple years ago, it was decided, let's stop using the word handicap. Let's move toward using the word disabled. So instead of fresh corn, with the H being handicap, Fred's corn uses disability. Sex includes gender identity and sexual orientation and all of the associated things to that. Basically, everybody should have a fair chance at real estate. Let's not deny anybody real estate on the basis of any of these things. C is for color. R is for religion. And N is for national origin. No discrimination on the basis of where somebody came from. So those are the protected classes that we'll dive more into in chapter 19. And they pop up, sadly, in property management and landlord tenant all too often. Here's the thing about fair housing. Both the landlord and the licensee who's managing the property, they could both be held liable for the actions of the other one. That's how serious this is. Let's, as brokers, make sure our client, our landlord client, property owner / landlord client that we're managing the property of knows the rules and laws about fair housing so as not to get us in trouble too. Right? We are both held responsible for the actions of the other. And it's also, remember when we talked about RESPA violations, we noticed that if you're guilty, you could be penalized 3 times the amount in damages, treble the damages. This is the other place where you could have to pay 3 times the amount in civil liability, civil awards for damages. The North Carolina rental agreement, major provisions. What sorts of things would a landlord and tenant want to have in a lease? What would you want if you were going to lease a property to somebody as a landlord, from the landlord's perspective or from the tenant's perspective? What sorts of things would you expect to be covered? Major provisions in that lease. You're going to give the attorney some instructions as to what to write up in the lease. What are you going to tell them? I want you to add these things. What sorts of things? What do you want in that lease to protect you as either the landlord or the tenant? I know some of you have had leases recently or maybe currently or at some point in your lives. So yeah, there we go. Amounts, beginnings and endings. How much is that rent going to be? What happens if they don't pay? What happens if the check bounces? What about utilities? Who's paying them? I mean, it also has to do with, is this a residential or a commercial lease? Yeah. Eviction, quiet enjoyment, pet policy. Is there one? That sort of thing. Yeah, late fees. The more you can put into that lease up front, the easier time as a landlord you will have in enforcing those things later. But if it's not in there or ambiguous, it might be hard for you to prove your side. There you go. Good one. Insurance requirements, making sure that tenant knows that they need to get a renter's policy. All of those things are in the standard boilerplate realtor provided lease that we'll look at in a little bit. Oh, that's a good one. Safety, no barbecue, no grill on the balcony, no smoking, certain hours of being quiet. That's good. Let's dig more into the property management side and look at chapter 16. All right. So now we've been looking at the lease and comparing it in parallel as a contract for purchase. Now we're going to look at the property management agreement in parallel with a listing agreement, because it's between a broker handling the rental side of things on behalf of the owner, whereas a listing for sale is a broker handling the marketing and selling of a property on behalf of the owner. So it's a broker and an owner involved. So contract provisions, the duties of that property manager, we're going to look at those. What's required to be a property manager? What kind of license status do you need? Yeah, definitely. Real estate license. Does it need to be active? Active and a full broker, not just a provisional broker. So if any of you are excited about starting property management, what month are we in? In November, because you pass everything on the first time, you're not going to be ready. You got to get rid of those post-licensing classes. And also, frankly, the commission says, well, you also better have some good guidance in that particular arena. Whether it's property management or commercial or residential, anything, you need to have training and guidance. And you better have a BIC that knows about property management if you're going to be property manager, by the way. Active, non-provisional brokers are allowed to do property management when you're doing it on behalf of someone else. If it's your own property, that's different. You can do your own for lease by owner, for sale by owner, for lease by owner. You could form a subchapter S or a C corporation and hire unlicensed W-2 employees to do the work for you. And they don't need a license because you have the license. You're the broker, but you could have unlicensed people carrying out a lot of these things. And if you'll recall, for rentals, you can have them do a lot of real estate activity without a license because they are W-2 employees. They can show those rental properties. They can not just fill out pre-printed forms, but execute pre-printed forms because it's W-2 employee of you, the active non-provisional broker. What are our functions as a property manager? Well, overall functions to preserve the value of the property and to generate income from the property. And what's coming in minus what's going out is the net profit, right? How much are you bringing in from those fourplex, those 4 units in that one fourplex? $2,000 a month times 4, $8,000 total revenue. Oh, but it costs some money. Got to pay the yard guy. Got to pay for general maintenance for those air filters and this and that and the other, and have the heating and air system maybe adjusted every year, inspected, make sure everything's in good shape, and subtract from that $8,000 those expenses. That's your net profit. Some other expenses would include the property management fee. How's a property manager get paid? Anybody have an idea how we could charge someone to manage their property for them? Yeah, a percentage of the rent usually. A lot of times it's 8 to 10%. You found that? 8 to 10%. We'll see a little bit of a little exercise in some calculation of that. But if you recall, out of the three broad categories of agents, special agents, general agents, and universal agents, this one is the middle level because we can do a little more than we can when we're helping people buy and sell. We're general agents when you're a property manager. You can sign on their behalf a little more than you can when you're helping someone sell or make an offer. What else? Imagine this. You're a property owner. You want somebody to manage your duplex for you. What are you going to do to find and hire that property manager? What are your steps involved, you think? What would you do? Put out a message on your Facebook, see which one of your friends wants to do it? Maybe not. Depends on your friends. May not be a good idea. Could put the word out somehow, though. Get some CVs, some resumes coming in. Yeah. Find out who might be doing what. What if you took a good long month or two, you reached out to a bunch of places, you got a bunch of resumes, you sorted through those resumes, you called the references, you did a bunch of work and found a top two, and you picked one of those two based on the interview, and you're pretty pleased with them. Are you in a hurry to do this same thing a year from now? Or 6 months from now? It's a little different than a listing agreement, isn't it? That listing agreement is to sell that property, and that's probably going to get done in a couple of months. This property management agreement is for however long you're going to own the property. So you might not have any reason to change property managers from one year to the next. And so for that reason, the property management is one kind of agency agreement that is allowed to have a renewal clause. That is a very testable. Maybe it should be in red. A very testable item there, right? Which kind of agency agreement could renew, can include a renewal clause? This one. This is it. Not a listing one. That one's got to die. Either sell it or it's dead, expires, and you don't just get to fill out a listing agreement and say, for this person in this world, I'm going to list everything they ever sell. I wish I would be much further along if everybody I've ever sold to had to call me, but they don't. Everyone is a brand new one, but not for this. If you're holding it down as a property manager and maintaining that property and keeping it running smoothly, there's probably no reason for an owner to say, you had your turn, I want to put someone else in charge. Unless you screw it up, it's yours to lose, right? So, property management agreement needs to be in writing because it's an agency agreement, and what? All agency agreements are in writing. We know that. It establishes our authority as a property manager. It says, here's what you're responsible for. Not this and this, but this and this and this. And it can automatically renew, because why not? I sure wouldn't want to go through all that same hiring process if I'm happy with the person. They're going to be my person for years, unless they screw it up or if I sell everything off. So, needs to have a description of the property being managed. That's not a surprise. It also needs to have a period of time. It needs to outline the responsibilities of that property manager. What do we expect of them? How are they going to handle this stuff? Are they going to collect the rent, pay out all those expenses, the operating expenses, and then give us the leftovers, what's left, take their piece out, and then give us what's left, and give us a statement showing where all the dollars go, and then outline the owner's responsibilities. Maybe there's something about the property manager can have access to the owner's bank account, a certain account for running this operation, because don't bother me if you need to buy some light bulbs. Let's just give you the authority to handle up to a certain level of expenditure. Now, bother me when you're shopping for an $18,000 heating and air unit. Yeah, let me get in on that decision. But if it's up to $500 or maybe even $1,000, I got better things to do. I trust you. Use your best judgment. or whatever the amount might be, right? You might want to keep it low. How often are they going to report to the owner? Keep them apprised. I'd say at least monthly, but that should be spelled out. And what happens when we need to let them go? What's going to be expected if they want to quit? Maybe we outline that they agree to give you some notice because you got to replace them. You don't want to, if you wanted to be one, you wouldn't have hired them to begin with. So at least maybe build in some time for you to find a new person so you don't have to do it. Because you know Murphy's Law, if it is going to go wrong, it will go wrong. And just that moment when they quit is when you're going to need to evict someone. And now you're spending all day in court trying to evict somebody. That'd be pretty rough timing. Here's a very testable slide next. Take this one down. Out of all the variety of things a property manager could do for the owner, they are not allowed to do these 4. It is not the responsibility of the property manager to make capital improvements. They don't handle turning a carport into a garage, for instance, fixing up the property, renovating the kitchen and bathrooms. They might suggest it, but they don't make it. They don't use the money they collect from rent to spend and make the capital improvements. The owner would have to have a say in that. Property manager does not reinvest profits. It's not on them. It's not their right or privilege to take the rent collected, take their piece out, and then decide, I'm not going to give it to the owner. I'm going to go stick it in a Bitcoin or 401k account or whatever. Just give the owner their piece and let them invest as they wish or whatever they want to do with it. But the property manager does not reinvest the profits. And they don't pay the owner's income tax. The owner has a different professional for that. The owner handles that with a CPA. Property manager also does not establish a depreciation schedule. Who would establish a depreciation schedule? What other professional you might hire would establish a depreciation schedule of the property? The depreciation has to do with what? The big draw for investors to invest in real estate is that they can offset their income with depreciation. And when we're talking about income and depreciation, yeah, there you go, CPA, your tax person. That's who's handling depreciation calculations, not the property manager. Depreciation schedule means this year we'll deduct this, we'll depreciate this amount, next year it'll be this amount. That's not your job as a property manager. That's for a tax person. Maybe CPA, bookkeeper, somebody like that. So these 4 things. If you think about when you are going to list a property for sale, what are you going to do when you go in there on that listing appointment? You're going to show them what the property is probably going to sell for with your CMA. You're going to also, anybody ever as an owner, seller, anybody had a listing appointment with a real estate agent? Anybody experienced that little treat? Nobody? Okay, good. So that agent, what they do? Come in there, tell you what they do to market the property, maybe tell you why they're so great. And hopefully they didn't tell you why other people suck, but they focused on their pluses and not other people's minuses. That's probably the better way to do it. But part of that is showing the deal. Like, here's what I'm going to do for you. Same thing here. A management plan. As a property manager, telling that owner, what are your objectives? When I go on a listing appointment to help somebody list their property, if I do take a presentation, like an official PowerPoint somehow or a printed binder, I'm not bringing it out on the table right away. The first thing I'm going to do is just sit there with nothing and say, what can I help you with? What is your biggest concern about this thing? What's going on? What are you worried about with this whole transaction? And then I'm going to do the hardest thing in negotiating in business in general, and that's sit quietly and listen. and let them tell me what the answers are before I take the test. Really. Because they'll tell me if you're just kind of kind and come at it with the right kind of energy, they will eventually confide in you and say, well, I'm really worried about the timing. I mean, I feel like I'm going to get the money I want out of it, but my main thing is that we can coordinate this thing. I don't want to be homeless for very long. I'm worried about selling this place and finding a place to go. What if I can't find a place to go and then I have to sell it? If I know that that's their biggest concern, that's great, because I have a whole list of prepared replies to that. First of all, nobody's going to force you to get out. This is still your property. The worst case scenario is you have to turn down a really good offer. So let's say a couple offers come in. Let's look around real quick, see if something you really like is out there. And if it's not, worst case scenario, we just tell them all, nope, sorry, even though you're above asking price, we're not taking your offer. They're probably not ever going to do that. But I just want them to know that they're not going to be forced to sell it. Because a lot of people think that if they bring you a full price offer, you have to do something, but you don't. Same thing here. I'm going to explain to that owner, here's my plan for managing your property. What do you want to accomplish? Are you trying to raise the rents on everybody? And we need to maybe step that out over time. Would you rather the person in 3C get on out of the way because they've just been a perpetual toothache the whole time? And maybe it's time for their lease is coming up and we just don't want them to renew. We'll just let them go ahead and move on with life because they're just not a good fit. Let me know. Tell me your objectives and I'll put together my plan. Part of that is going to be to give them an analysis of the neighborhood, the competition. Here's what's down the road. Here are all the duplexes in the area. Or here are all the apartment complexes, 100 units between 1 and 150. Units look like this. Oh, look, they all have pools. And you have got some acreage. You think you might want to put in a pool? We could raise the rent by this much. That sort of thing. Property analysis, neighborhood analysis, help them understand what their investment vehicle in the form of that property could be. Provide financials in the form of an operating budget, a cash flow report. Let's see what those numbers are doing and help them understand them. And then you're going to be glad to see an old friend, this guy. Depending on the size of the investment, you might use some version of this thing, this little given acronym to get down to net operating income and then a little further down to cash flow. Because when you take any sort of investment course or watch YouTube videos about it, they mention cash flow or net operating income at some point along the way. And so we saw this. We played with this math a little bit. Just get familiar with the formula and the relationship. The numbers probably aren't going to matter all that much. But just realize that, and if you really think about it, you would probably come up with this on your own on the back of a napkin. If you were just thinking, let me maybe buy this triplex. Okay, how much could I possibly maximum make on this thing? Looks like similar ones are renting for $1,800 a piece. 3 times $1,800, that's what? 46 plus 8, so that's $5,400 a month. But what if one of them is vacant? Oh, so we need to allow for a vacancy potential. So $5,400. Take out a little bit for maybe a 5% vacancy or chance of it being vacant. And then subtract for the other things it's going to cost to keep it going. Operating expenses. That's our NOI. Has nothing to do with debt service. NOI is independent of debt service because, again, the appraiser's assuming it's going to be paid for. That's a non-issue when it comes to determining the net operating income. Oh, you want to know the cash flow? Well, now we'll subtract out how much it's going to cost to have a loan. And maybe you want to help that owner understand, look, if you want to, what you could do is instead of owning this one outright free and clear, which would be great, but maybe it would be better to own 2 of them with a 50% loan to value ratio on each one. Now you're at least lessening your risk. What happens if you have one free and clear property? Well, if it doesn't get rented, you have a non-producing asset. But if you have 2 somewhat leveraged properties and one is not being rented at the moment, you still have some income coming in, right? Just depends on how many units we're talking, but that's why the NOI varies from cash flow. Debt service. What if I have a loan versus not have a loan? So explaining, helping them understand this thing could be a part of that. Property manager duties, obviously renting the property. Anybody ever, Victor, have you had to put a renter in yet? You inherited one and you got rid of her, but you've had to pick a good one. Yeah. Yeah. So what'd you do to find a renter? Nice. Still in contention. Nice. That's good. A process, a system. So there's a lot to it. There's a lot going on. And the bigger the property, the more units there are, the more rental applications there are. And depends on where it is and how attractive it is and what the price point is as to how many you're going to have to sift through to get to somebody that you can maybe say, well, what they're telling me versus what is really going to happen. How much do I believe it? Right. Yeah. So renting the property, that's a big one. Maintaining the property also. When you're managing a property for somebody else, what do you have to do to keep it in good shape? That might involve this, hiring people, hiring staff, maybe an on-site manager, maybe a housekeeping staff. Environmental concerns, especially if it's commercial. Is there some sort of chemical involved? Are they an auto body work painter? Something that with toxic chemicals, are they disposing of them properly, or are they in barrels in the back that are rusted through and leaking? As a property manager, you have to be in tune with this ADA, Americans with Disabilities Act, as well. You've got a couple things going on, both the amenities of the building being accessible, but also employment issues. How many people are employed by you to run this apartment complex? Well, now you also have to attend to their needs as employees, as well as the building itself and its accessibility, because that PM is responsible for compliance with ADA requirements. Depends on how many people you have working for you, but you got to have a certain access to restrooms available. I live in this split level home and I've thought about making it a real estate office before, but the bathroom requires going up 5 steps. And at what point of hiring people, how many agents could I have here before I would have to put a ramp or a bathroom on the main level? So those would be considerations I would need to deep dive further into. There would be a certain small number I could probably be okay with, but I think maybe 15 or more requires a certain level of accessibility, and that turning a residential property into commercial could be a little more expensive, especially like these cute little quaint historic homes in these downtown areas that turn into office, and you're like, why are they doing so much work? Well, they have to. That's why a lot of times their official entrance is in the back, because they want to leave the pretty picturesque front intact, unchanged, and they make the wheelchair access on the backside. It's not as noticeable, but they have to do it to comply with ADA because they're a certain size. Risk management involves avoiding risk when all possible, removing that source of risk like a pool. If you want to rent a property and it's a house that has a pool in it, I'll bet most landlords are going to say, let's just not have the pool because I don't want the liability for these tenants. Even though it might rent for more and they would love it, I'm not paying for a lifeguard to be on duty And I don't trust people for some, I don't know what it is about pools. People just go a little crazy. They start jumping off things and things get broken, including bones. And as a property manager, you have to shop for insurance, retain risk protection, control it with sprinklers, fire doors. Are we in compliance there? Maybe it's a house, an older house, and the garage never had sheetrock installed. Well, now you're going to convert this to a rental. The garage, for fire protection, needs to have a certain thickness of sheetrock on the interior walls as a fire break. In case the car blows up or starts a fire, how long do you have to get out of the house before that garage fire comes in? And that sheetrock, certain, I think it might be 1/2 inch or more. I've seen some houses where they took it off the ceiling just to see the taller ceiling. But all that needs to be considered when you're renting. Transferring that risk comes in the form of the insurance policy. You're paying a premium to have them take on the risk for you. That insurance coverage is going to involve a depreciated value and a current replacement cost. And then finally, here's what the commission calculation might look like. It looks more complicated than it is. It's just a percentage of your monthly rent quite often. So if our monthly rent is $2,525 on the left, and we're managing the property for a 10% commission, that means earned monthly commission on that one property is $252.50. $252.50. Well, that's just one. Maybe you're you spread that out times multiple properties, and also for this very one, it's just 1 month. For 12 months, that $252 becomes $3,000. And then, you build your portfolio of things you manage up to 10 of them. Well, now you're at $30,303. $30,300. So that's pretty much bare bones basic commission calculation there. It's just a percentage of the monthly. And you can drag that out, draw that out to annual if you need to. Those are the highlights and the most likely material for property management. Let's take a look at what's next. Let's do some fair housing. We'll get on into some of these smaller chapters as we go into break here in a few minutes. Oh, wait. No, first is construction. There it is. Yeah, I was just noticing that. I was reading my Roman numerals wrong. All right, let's do fair housing. There we go. Chapter 17, fair housing. We're going to talk about the purpose of it. There's a federal fair housing. There's also state fair housing laws. Talk about how they are enforced, what their impact is on us as brokers, the classes of people. That's the Fred's Corn. We'll reiterate what the purpose of ADA, Americans with Disabilities Act, as well as defining sexual harassment. And so here's a couple things about this. Civil rights laws affected the real estate industry to give everybody a similar range of housing choices, right? So on the left there is the Equal Housing Opportunity logo. And you need to include that in your marketing. You need to have that on your website, your business card, your sign. It shows that you understand this stuff and you're willing and eager to give everybody a fair chance at housing despite their category, their fair housing categories. if you end up getting in trouble, or maybe not officially in trouble, but there's an investigation, they're going to look at everything. And if they don't see any sign of this equal housing opportunity logo anywhere in your marketing and your promotion, that's sort of a red flag. And they're going to think, well, this must not have been that important to them to make it a priority. So there's a book, free book, Fair Housing is not an option, it's the law. But equal housing opportunity logo is important. Here's Fred's corn in a prettier format. Familial status, race, disability, sex, color, national origin, and religion. Part of what you need to know is the order that these various categories were added chronologically. So it all started in 1866 as the result of what? Historical event. What had just happened when 1866 rolled around? You got it. That keeps it pretty simple for me to remember. And what was that war about, on the surface at least? Race. So race started it all. And as a result of the Civil War, nobody could discriminate against someone else on the basis of race when it came to either real or personal property. Now, people did, obviously, for sure, but legally, the Federal Civil Rights Act of 1866 said no, can't do it. No exemptions. Got to keep it fair for everybody, regardless of race. So that was the very first one in general, because it covered both real and personal property. If we fast forward 102 years, from 1866 to 1968, you notice back here, it was just the broad stroke Federal Civil Rights Act. That was for everything. But now we're getting into the specifically Federal Fair Housing Act. Now we're talking about housing, specifically housing. So the first four categories were coming right out of the chutes in 1968. Can't discriminate against someone on the basis of race when it comes to housing. Can't discriminate against someone on the basis of color when we're talking about housing, or nationality, or religion. Those were the first four founding members. And after a few years, in 1974, they added gender, sex. At the time, that pretty much meant can't discriminate against females or males, either one. And I think of the whole women's lib kind of thing that I remember from history books. A lot of that was really big in the 70s. That's kind of how I remember that in the 70s they added, because when I think of this, it's basically what it was. They were adding for females. Now today, fast forward, they have made a statement that says, look, we're not going to add extra words and extra categories to these 7. We're going to fold in the whole dynamic of sexual identity, gender identity, and sexual orientation within this category of sex. Again, don't discriminate against somebody on the basis of these things when it comes to helping them in real estate. Just basic, decent behavior kind of stuff. Fast forward again to the 80s. Disability was added. Well, at the time it was called handicap, but now we call it disability, as well as familial status. Familial status and disability, and that's it. Those are the 7. Familial status, again, means what? Children, yeah. Not who's married to who, just dependent children. Can't discriminate because somebody has kids. And that's the Federal Fair Housing Act categories and the order in which they were added. So they might present some sort of a scenario and say, which of the following, or when was this category added to the Federal Fair Housing Act? Something like that. So you're going to need to be familiar. There's actually a chart. Let me tell you the page it's on. It's chapter 19 in your book. In the yellow book, it's syllabus section 17, but it's on page 477. And it kind of just gives you a chart. I don't have a camera pointed down at this. I used to, but I don't anymore. Maybe this will help. And it's that chart. Just shows those X's in the various categories along the way, and whichever act added the category. And the very last one mentioned on this list is the next thing we'll talk about, and it has to do with lenders. The Equal Credit Opportunity Act adds 3 protected classes. Lenders cannot discriminate on the basis of these 3 things. You can't deny somebody a loan because of their marital status. You can't deny somebody a loan based on their age or whether they receive public assistance income. So the age thing can be kind of interesting. I know people that have relatives that reached 100 years old, 105 years old. And a lender cannot tell that 105-year-old granny that she is not allowed to have a 30-year mortgage because I don't think you'll make it that long. That'd be terrible, but it's also illegal. Also, if they own it, guess what? They die. It's the responsibility of their heirs and the estate, right? So that's a big one. And then if somebody's trying to apply for a loan and they're writing down that they get assistance from income from public assistance, that lender cannot deny them based on that source of income. So what sorts of things are we talking about with fair housing prohibitions? You can't say, we're not going to rent to you. We're not going to sell to you because you're in such and such protected class. Or charging somebody a bigger down payment because they're in a certain class. Or at a larger interest rate. These are all true life things, sadly. There was a update course last year. What year before? It was... They're running together now. It might have been the year before last. And they talked about a lot of this stuff. Yeah, it was about racial equity. And Long Island, New York was like, they did a sting operation and just did this huge bust. A bunch of real estate agents got in trouble for violating fair housing stuff. And what they do is Department of HUD, I believe, will hire testers, people who are hired to call people and ask them very pointed questions and just kind of see how we handle it. See if we know our fair housing rules. So if you get a phone call and somebody starts asking you questions and it's like, this person is getting a little bit prejudicey in their questions. They're asking some questions that clearly are not okay. You better just always make sure you handle these things properly because you might be getting tested. Does that tester person have to admit that they're a tester? Like on TV and movies, they say the cops have to tell you if you ask them? No. No, what's the point of a tester if they have to give it up? They are professional liars. They can call you and say, I want to buy a house. No, they don't. They just want to see if you know the rules and laws and if you handle this properly. Because a lot of people haven't in these situations. And another big one is, oh, I'm sorry. No, it's unavailable. They've already leased it or it's already sold. Those are all just kind of classic examples of how these abuses can happen. Federal fair housing. What does housing mean? Housing. Occupancy as a residence, right? And that means between 1 and 4 units. If we get to 5 or more units, it's considered commercial. But residential, between 1 and 4, that's a duplex, triplex, fourplex, or quad. So that familial status, children under 18, we know this, handicapping condition or disability, a major life activity is being limited. By the way, this includes rehabilitation for drugs. What? Hi, I'm Neil. I'm addicted to meth. I want to rent your place. I'm actively using. Can you refuse to rent to them? Yeah. How about this? Hi, I'm Neil. I'm in rehab for my addiction to meth. Oops, now it's a disability. Can you discriminate against me if I'm in rehabilitation? No, because that falls under disability. So you got to know your laws and your rules, right? Rehab is a handicapping condition or a disability condition. When we come back, we'll talk about ADA. See you back here in 10. Okay, Arnell, did you have a question? What were you talking about? Familial status? Is that what that was about? Oh, sorry. How did I mute? I don't remember muting that time. I'm sorry. Arnell, did you have a question about, was that about familial status? This 2 heartbeat per room thing? Good question. I think the main thing would be if they said 1 heartbeat per room, because then they're specifically saying only 1 person, which would preclude anyone with a minor or with a child. So I don't think that would be a problem. I think it'd be the opposite if they were to say that. Right. That makes sense? Good. You're welcome. Okay. So, Americans with Disabilities Act says if you want to rent out your historic downtown property that's been up for 125 years, guess what? You better be willing to widen those doorways for the wheelchair. Do you want to cut into 125-year-old doorways with all of their fancy fluted features and columns and blah, blah, blah? Maybe not. Well, then you shouldn't rent that property because your requirement to make it accessible supersedes your desire to keep it historic and authentic, right? Probably why you don't see a lot of historic rentals, I would imagine, because they don't have. I've been in historic houses and they're barely tall enough for me, and I'm not even 6 feet, 5'10" and a half, which I forgot. Over the years, I thought I was 5'11" and a half, and the other day I'm like, oh man, I didn't remember that. You know how we are. We round up. At least I didn't round up to 6, but I wear bigger shoes now. So landlord has to allow reasonable modifications, can't increase security deposit for disability situations. Here's the thing. What if it's somebody confined to a wheelchair or somebody who's a little person, like a little person? Can you imagine if your top of your head can't even get up to the counter, how miserable and impossible it'd be to deal with a kitchen? Guess what? They lower the cabinets. They lower the counters. They have things redone and modified so that they can have a normal kitchen experience down to their waist or whatever it is to us. And that's okay. And the landlord has to be okay with that. Lower all the counters, in the kitchen. But here's the catch. While the landlord must be okay with it and allow it, they don't have to pay for it. The tenant who needs it is the one who pays for it, and they could negotiate, well, when you're done in a year or 2 or however many years you end up renting this from me, and I end up renting it to a, what do you call non-little person height? I don't know. I should, I guess. you don't want that size anymore. You want it to be restored. So part of it could be that the tenant also has to pay to bring it back up to the typical code height, right? So that's what we mean by may negotiate a restoration agreement. That could also apply to the doors. It could also apply to putting in a wheelchair ramp. And sometimes, depending on the lay of the land, that wheelchair ramp out front, first of all, needs to be on the front, not the back, because of just the way it is. Or if it is wherever it is, it might need to be like all the way across and then go up and then a little more and then a little more. How high is the thing? How big? How much lumber are we talking? And good question. Good question. I think when it's a certain level like that, they would have to have those things in place anyway. But I'm more talking about like single family, maybe duplex, triplex, fourplex. But if it's anything bigger than that, there's commercial ADA requirements that would pretty much require full accessibility from everybody, general public and beyond. There's apparently a post office, I think in Cary, North Carolina. Another instructor that teaches up that way has used it as an example before. And it's such an old building. It's got like 20 stone steps, and just the way it is makes it pretty much impossible to add a wheelchair ramp kind of a scenario. So what about people who have a P.O. box in that post office? Well, instead of modifying the property, they modified the procedure. They changed the procedure. So a person who needs help pulls up to a certain parking area, honks the horn, or maybe they text, I don't know. But last I heard, it was honks the horn, and a postal employee is on watch, and they come out and get your key, go in and empty your box and bring it out to you. So they couldn't make the adaptation. They couldn't make the modification, so they adapted the procedure. I think that's the right words. So it's that sort of thing. Just make it so that that person has equal access to the same stuff. If you're changing things, adding things, modifying, then the tenant pays for that, and you could still have a restoration agreement in place, so they've got to undo it when they're finished. All of this is without increasing the security deposit. There are some exemptions you might be tested on. So this one can get a little confusing. What we have on the left are national fair housing law, or federal, probably a better word, federal fair housing law exemptions, meaning the law says one thing, but with these exemptions, you don't have to follow the law. And on the right are the North Carolina fair housing law exemptions. So what if this property is in Virginia? First of all, we don't care. This is a North Carolina real estate license, right? Secondly, do you have to comply with North Carolina fair housing laws in Virginia? No, that's stupid. Do you have to comply with federal laws in Virginia? Yes, we do too, here in North Carolina. Which one has to be followed? The federal law is not as strict as the North Carolina law. Which one do you have to follow? You got it. Just like we've seen before. The stricter, whether it's building codes, the stricter always wins. City, local, state, federal. I don't think there is a federal. Building codes, zoning laws, doesn't matter. The size of the entity doesn't matter. It's the one that's stricter that matters. So with these exemptions, let's look at it. On the left, the federal fair housing law says an allowable exemption is someone selling their own property or leasing their own property. Let's put a point on that. What does that mean? If you're selling your own property or leasing your own property, let me just get blunt. You could violate fair housing laws. You could say, I don't want to sell to you because you're in a class that I don't want to sell to. That sounds terrible, doesn't it? That's just offensive. That is an exemption. Because you're the owner selling your own property or leasing your own property, it's an allowable exemption. But North Carolina did better than that. And North Carolina says, we don't care what the federal one says, you're not exempt. You've got to comply with fair housing. You can't use protected classes as a reason not to sell or lease to someone if it's in North Carolina. Guess what? Everyone we're doing, if we're in this class, is going to be in North Carolina because this is a North Carolina real estate license. So good job, North Carolina. You did a good. You beat the federal in this case. Now, I imagine there are some states, I don't know which ones, but I would guess there might be a few that match the national exemption. We could all make our guesses. We don't need to. Don't put that in the chat. The federal exemptions also say that if it's a multifamily unit, duplex, triplex, fourplex, and the owner is one of the residents, then they, again, can discriminate. They can say, I'm in this duplex, I'm on one side, and no, I don't want this person for the other side. And that person is in a protected class. Again, it's cringy to even say it, but that's frankly what it means. It's an exemption. We didn't do so good in North Carolina on this one. We kind of made it worse. On the North Carolina one, not just the owner, but even a relative of the owner could live there. And that's grounds enough to be exempt from who can live in the other one. So I'm ashamed of North Carolina on that one. On the national side, private club that says this is for this category can restrict it to just that category. If it's a private club for a certain category of protected class, that is allowable. You got to be one of the members of this class to be in this club, and the same for the religious organization. But as an example, though, let's say it's for the religious organization. This is for the Catholics of Cabarrus County. Got to be Catholic to be in this group. That does not give those Catholics permission to say, and any other category that you're in, you can't be in here either. The only one they're allowed to use as a basis for membership is the religious one. So it doesn't give them a blank carte blanche and all the other 6 as well, kind of a deal. And then the other one still in North Carolina, student housing can still be all male, all female. That is still allowable exemption. I ran into a mother of a new college girl that just went away to school. She was a homeschool / Christian school girl for her whole life. And her first week, she was in the bathroom of her little 2-room suite. Each room has two girls, and the boyfriend slept over in the other room. And so here he comes out of the shower, and this girl's brushing her teeth, and I'm like, growing up quick. You got to grow up quick in this world. But it's sort of, I guess, a culture shock for some people. But apparently that's the rule in that dorm at that university. It's like, as long as the other suite mates are okay with it, we're okay with it. That wasn't quite, I don't know. I guess it depends on the school, doesn't it? I went to UNC Chapel Hill. We had suites of 4 rooms to a bathroom. That meant 8 people to a bathroom, and there was all kinds of comings and goings all the time. And that was like 3 years ago, plus a couple more. But anyway, other exemptions. Have you ever wondered about this? You've seen the 55 and older communities, and in light of what we just learned, you're like, wait a minute. Are you saying that if you're 54, you can't own here? You got to leave? Well, here's the thing. You never would have been there to begin with, because if you'll notice, these 55 and older, or maybe 62 and older communities, they start from scratch, don't they? It's never a conversion from an old neighborhood that becomes one of these. It's a new, coming out of the ground, new construction that happens. That's because they are allowed to. They're exempt from familial status because some people in this age bracket might not want to deal with the bikes in the yard and the noise in the street and whatever else happens when there's kids. And it's just an exemption. It's allowed. A lot of times the fine print rules say at least one of the 2 in the couple who live in the house or own the house has to be 55. The other one could be, 50, 40, but at least one of them has to hit the age requirement. They also might give you a window in which you can have those grandkids come visit, or somebody less than, or the college kid. but it's a window, right? It's not permanent. So that's why it's allowed. I guess officially, if it was like a 20-year-old neighborhood, and it, sometimes you can think of local neighborhoods, you're like, yep, that's where the old people are. Nothing but old people when you drive through there. And maybe it's one of those, and the very last person in that 100-house neighborhood who is less than 55 moves out. And for this small window of opportunity, that new owner who bought from them was like 63 or something. Everybody's over 55. If they wanted to, I guess they could hurry up and make a vote across the whole community and say, hey, let's shift this over now and make it 55 and older from here forward. You never hear of it. I doubt they would, because why would they want to cut their buyer pool that significantly when they do decide to sell, right? But that's sort of how that works and why that works. That's why they're usually new construction. By the way, they're usually expensive. The only one I've known in the last 10 years that was less than 500,000 was 8 years ago, and it was in Salisbury in the 350 to 400 range. But now, especially, they're usually $500,000 or more. And of course, because all of the amenities cater to the needs of them, it's all single level, it's all easy accessibility, and it's probably $250 plus per month HOA dues, because there's a lot of activities and extra things going on in the clubhouse and all kinds of things catered to just their needs. Hey, sure. Yeah. That would be in the bylaws, right? That'd be in the covenants and restrictions, and that's part of it. I wish I did. I probably should try to find the paragraph or something that would handle that specifically, but I'm sure it's something in there that says if you buy in here and you die, your heirs can't occupy this place. You're going to have to sell it. Or if we allow it to be rented, they might not even allow it to be rented. Sometimes neighborhoods have a rent cap. No more than 25% of the properties can be a non-owner occupant. So I bet that's just part of the deal. Good question, though. Yeah. And, I'm also seeing out there in the wild that they, meaning builders and developers, know this is appealing to, quite frankly, the boomers are a huge segment, right? I think as much or more than maybe millennials, or maybe is it Z? It's one of them that's 2 or 3 generations younger. They're about the same size, but the boomers are significant, and they're still around for a good 20, 30 years of buying decisions. So not a bad idea to cater to them and try to get that business. But you're seeing some neighborhoods that don't want to make this commitment and say full out, yep, 55 and older, but they will say like maybe senior friendly or some word that says we're going to be single level. We're going to pretty much have all the same features, but not be an official 55 and older community. You can be younger, but we're going to gear toward that so that they don't have to worry about the compliance part. They don't have to worry about losing out on buyers that might just love it, but they're not meeting the age requirement. And they're just knowing that because we've built this product kind of with these single levels, easy accessibility, we're probably going to draw more of that kind of interest. So you see that out there a good bit. Let's see. Where did that go? What's next? Enforcement. What do people do this stuff wrong? And they do. We've got state fair housing laws. We've got federal fair housing laws. If it's a violation of state fair housing, then who would you report them to? That's good to know. The North Carolina Human Relations Council. Just go to their website. There's a complaint button, and you can give all the details of what this complaint is. If it's a federal law violation, that's going to fall under Housing and Urban Development, HUD, Department of HUD. The Office of Equal Opportunity at HUD is where you report a federal fair housing violation. If you want to do both, because it's something that applies to both, you would just reach out to both separately and put in the same details. couple of words you need to know. And you may have noticed these in your reading. So let me test you on them first. What if I go to a listing appointment and I'm trying to scare the seller into selling because I know they might not like it if a certain protected class is moving to the area. And I say, you better go ahead and sell now before this whole neighborhood shifts over to being owned by a bunch of fill in the blank. What's the word for that horrible behavior that is illegal, where I'm trying to scare a seller into selling because of violating fair housing, because so-and-so is either moving out or people like you are moving away. So-and-so is moving in or people like you are moving away and you don't want to be all the only one here kind of a thing. Yeah, Kirsty's got it. Block busting is what that's about. You're busting up the block, right? Trying to scare them and intimidate them and into selling. The one for buyers, where you're trying to intimidate a buyer, is steering. That makes a lot of sense, isn't it? That's probably easy to remember. Because back in the day, I can't remember, by the way, the last time I put a buyer in my car and drove them around to showings. I just don't think it's a common thing anymore, and I don't mind it. I kind of like the little break. Because if you show houses for 6 hours in a day, it gets exhausting keeping that conversation going. And they run out of, especially if they're out of town, you kind of run out of things to say. And it's nice to have that little time to make phone calls, call them back, but you're driving them around. And what if you're driving that buyer to a certain neighborhood because that's where so-and-so type of person lives or tends to live? Terrible, terrible idea. We don't need to give real estate advice based on the people and where people would choose to buy. We need to give real estate advice based on the property that whoever the person is you're working with might want to buy, not because of who else might be in the area. And that goes both directions, by the way, guys. I've had people in a protected class, a little old lady who said, I don't care what this sounds like, but I want to live around people who look like me, she said. Guess what? If I complied with that and I said, well, then you need to go over here, that would be just as bad, just as illegal. I can't give them advice if they want to stay away from a group, and I can't give them advice if they want to stay within a group. Here's where the Muslims live. Here's where the Catholics live. Nothing like that, even if they ask for it. So that's where it comes into play that we need to know the laws and rules so that we can counsel them so that they don't violate stuff that now we're guilty of, because we're kind of on the hook for making sure they're educated to this stuff, because we can get liable for that too. Also, it's nice to talk about all this early so that if they are just a flaming, terrible, prejudiced person, let's go ahead and distance ourselves now. Don't put in a bunch of time only to have to basically fire them later when you find out, no, I don't want to work with you anymore because I get what you are now, and that's not for me. Let's cut that one off as soon as possible by putting it out there, saying, here's how I work. I'm not going to discriminate on the basis of these categories, and it's just the way this is. It's what you get with me. They'll just float away, right? If they see that you're taking a stand on that stuff, hopefully they won't waste your time. Sometimes when you look like someone else, they start thinking that you have their same dirt and that you share their same negative stuff. So you got to draw those lines. Oh, great question. And same thing. Deborah says, and this leads to one of my favorite examples of how this could work. A neighborhood, predominantly anything. Same stuff, same answer. So in Charlotte, there's the Jewish Community Center. You couldn't even write a listing description that said, only a block away from the Jewish Community Center. You didn't do it to hurt anybody. You just did it to make sure those who might be interested in that, very cultural and relevant and probably a big part of someone's life by their choice, would be a fit for them. But that doesn't work. We can't say that. We could say the community center or a community center. And by the way, YMCA stands for Young Men's Christian Association. So you just have to put extra thought into this stuff so as to stay on the right side of these laws and rules. And I'm when I teach it, and it's related to 2 years ago in the CE class, straight up, it was just because of the whole George Floyd and related things that had been going on. They added I think it was a couple of hours out of the 4 about racial equity. So we really deep dived into these types of things. And I hear all kinds of stuff from agents that are saying, well, here's just what I say. And a lot of it is just no, flat wrong. They can't say, you're not off the hook if you say, well, here's what I do. I just tell them to come back out and drive through the neighborhood on Saturday or in the evening when people are out. No, that's not okay either. The commission says, don't give that advice. You're encouraging the behavior. Basically, here's what you do. Look, guys, I'm here to give you real estate advice, not anything more than that. Not all that other stuff, CPA, legal advice, none of that. And also, I can't give you advice on who might live someplace. If you need to find that out for whatever reason, you're going to have to find that out some other way. Let me know what neighborhoods you've narrowed down to for whatever reason. Doesn't matter the reason. Just tell me the neighborhoods and I'll do a search for those neighborhoods. But if you tell me this is where the Jewish people live, or I want to live where the Jewish people live because I'm Jewish, that still is not okay. You got to stay out of it. And we're so conditioned to be full service in this business. It's so hard to break that tendency to just answer questions that they ask. Sometimes the answer to the question has to be, I can't answer that question because it's a violation. You got to be really careful about the people and really keep it focused on the property. As long as you can focus on the property and not the people, you pretty much stay in good shape. Finally, redlining probably has been in the news recently, so I wouldn't be surprised if every one of you knew this one. But it's the concept that a lender is discriminating by putting a map on the wall and saying, hey guys, we're not going to make any mortgage loans for this part of town because so-and-so lives there. The other side of the tracks, so to speak, drawing a red border around a part of town, area of neighborhoods that we're not going to make loans in. That's illegal too. So one of them is scaring sellers to sell, blockbusting. One of them is scaring buyers either toward or away from a neighborhood area. And another one is what lenders might do in terms of making loans or not making loans based on a protected class. And that stuff still goes on, guys. Probably no surprise. You see it pop up in the news from time to time. And that's why the testers are out there to kind of help people and weed out the people that aren't doing it right. So we got to be careful. For one thing, the advertising, the language, the words used in the ads. We get so focused on running ads, Facebook descriptions, MLS descriptions. MLS has some robots, I call them, just sort of AI that's programmed to recognize certain words that might be red flags. And I've gotten flagged before because maybe the word I used, I don't remember what it was, something like, this isn't it, but something like family room. And maybe they keyed in on family and they're like, oh, that might be a problem, but it wasn't. Another time, what was it? It was a good one. It really annoyed me because it was so typical of a robot who just got it wrong. Let me think what it was. I'll have to think of it later. But so that's programmed in, and let's look at those words, then we'll come back to that other slide. What might be acceptable would be just the term good neighborhood. Now, if the person saying, I want to live in a good neighborhood is winking at you and they have certain signs and things stuck on their car, you might be like, wait a minute. Are you talking code right now? But if they just mean good by crime statistics, I don't even quote crime stats, by the way. I tell them, I don't know what that means to you. I don't want to know this, but point is, where did you come from? What are you used to? What is your level of tolerance for crime statistics and whatever? So if it comes to that, do your research to them, is what I say, and tell me where you want to live. Again, I'll focus on the real estate. You tell me what neighborhoods, I can do a search for neighborhoods, but don't ask me to point you in certain directions based on protected classes. When it's crime stats, I'll say, call the cops, call the police department, ask them if these couple of streets of houses that we looked at that you're interested in, what the stats are for those streets in those areas. That's just hard fact, hard data, and it's keeping me out of the loop, right? But obviously not acceptable would be no French or no any certain thing like that. Acceptable would be bachelor apartment. Not acceptable would be female only. Walk to shopping is actually considered okay. Able-bodied tenants only is not okay. Family room is still acceptable. Adults only is not acceptable because of familial status. And I believe it was just this last year, sort of distantly related to this topic. In our local MLS here in Charlotte, they changed the term master bedroom to primary bedroom. And I kind of saw that one coming. I kind of thought that might be coming on along down the road, and it is now. So it's an ongoing evolution, right? We're just trying to keep things nice and inoffensive when it comes to this sort of thing. Advertising, brokerage services, can't deny membership to the Realtor Association, to any sort of association or membership services, membership to groups, and then appraisals. That's been another thing that's popped up recently. Appraisers using the information maybe that they dig up of demographics as some sort of reason to subtract from comparables values when they're determining what a subject property might be worth based on who's living there. Again, the main number one rule, focus on the real estate, the property, not the people. Don't worry about the people living there. Worry about the properties that you're dealing with. That will keep you on the right side of keeping your license. By the way, when you belong to the Realtor Association, you agree to subscribe to a code of ethics. The Realtor Code of Ethics. And Article 16 had an addition a couple of years ago. It says this: no hate speech allowed on any social media by any realtors. And that's about it. So here's the question. Which social media? Both business and personal. That's the answer. Here's another question. What is hate speech? We all know what hate speech is, but it could also be kind of broad. Is it the case that has fallen in that same situation? There's been a pastor, now, right or wrong, he preached from the pulpit on a certain topic that's pretty controversial when it comes to religion. And he also happens to be a realtor. And somebody heard about it, probably through a social media post of the video, and they complained, and he's up for complaint for violating this hate speech thing because he's quoting from the Bible. And valid, I get it, that's a thing, but that's kind of where we are with it. We don't have any case law that's been decided. If you were to Google Realtor Code of Ethics, Article 16, hate speech, you'd probably find the same PDF I found. And there were, I believe, 11 or maybe 12, let's say 12 case studies, real life, true examples of people who complained through this new hate speech provision. Out of those, actually it was 9 total. Out of those 9, 5 of them were indeed considered by the ruling group, right? The managers or whoever it was that did the, sort of like the real estate commission, but it wasn't them, decided, yes, this was hate speech, no question, and sanctioned the person appropriately. 4 of them were not. 4 of them, even though someone complained about it and the investigation happened, were ruled innocent. Here's my thing. All this was because they posted something on some sort of social media. Even though they were innocent, they still had to go through the accusation and the investigation to be found innocent. What's the lesson? Be careful. Be real careful. Know your rules. That's sort of, I guess, why we spend so much time on the rules and laws in this first step in your journey to this business, so that you don't have to get sidetracked with that sort of thing. So do the right stuff, but just be aware that some of those things can, even though if you're trying your hardest, you could still get complained about from people that have other interests in mind. So you got to know what you're doing to stay out of trouble. When brokers are involved, remember that federal exemption, the very first one said if you're selling your own house or renting your own house, then you can discriminate. Well, the minute they list their house with a broker, all that's out the window. Obviously, if you're in North Carolina, it's out the window anyway, because good job, North Carolina. But if a broker is involved, period, all of that flies away. We are held to a higher standard, and we're responsible for educating and making sure they do it right. Even our own personal stuff. Let's say the North Carolina exemption matched the federal one. Thank goodness it doesn't. But if it did, the minute we as a broker sell our own property for sale by owner, but because we have the license, guess what? You don't have the same exemption. We're held to a higher standard as brokers across the board. For one thing, it'd be a violation of the Civil Rights Act of 1866 if it's race related, because that just was a blanket coverage of real and personal property. But broker exemptions are not in existence. There's none, even in personal transactions. I don't know why this next thing has to be said. It's sad that it does. I'm glad that it is, but glad we're saying it. But it's kind of sad that we have to say, guess what? No sexual harassment allowed. As landlords and agents of landlords, you're not allowed to sexually harass your tenants. Okay. Thank you for that information. Wasn't planning to, but here it is. That includes verbal, not to make light of it, but no verbal, nonverbal or physical, none of that. All of that it's out there so that we can get the bad guys for violating those things, right? I get that. So that's it for the testing purposes. They probably would paint some sort of a scenario where the landlord or the property manager, meaning the owner of the property or the person they put in charge, harassed verbally or non-verbally or physically someone, sexually harassed someone. Here's the situation. Here's what they said. Would they get in trouble? It might be something like that, sort of presented to you in that way. ADA could apply, right? It applies to commercial facilities. So any store, ADA, got to have the ramp, got to have the little dip in the sidewalk so you can get from the parking lot up without taking a step. Got to have it in employment, certain levels of employment. There it is at the bottom. Firms of 15 or more employees need to comply with ADA. So an ADA applies to a real estate firm. When you're dealing in commercial property, you got to know what you're doing for ADA. When it's an office that has 15 or more brokers, or not even just brokers, but people, employees. Now you got to have ADA compliance because of the volume of people. That would mean, I imagine, 36-inch doorways to the bathroom, support bars, wheelchair accessibility. So any places of public accommodation, commercial facilities, and employment. Those are things that trigger the need for ADA. Yeah, parking, that's a good one. And we've already talked about this. Oh, okay. This is this one. Code of ethics. So on the federal fair housing groups, sexual orientation and gender identity falls now under sex. It's just all encompassing. But over and above that, the Realtor Association has said we're adding those specific classes to our code of ethics. So if you'll notice on some of those agency forms, when that all bold fair housing language is in there, these are tagged on to the end of the 7 federally protected classes. So there's really 9 that are mentioned, but 7 of them are federal, and these 2 are just sort of redundantly added to be more clear and intentional. Couple of little pop quiz here, and then we'll call it. Failure to comply with fair housing laws is both a civil and criminal violation, in addition to being grounds for disciplinary action from the North Carolina Real Estate Commission. True or false? Good job. Oh, sorry. Client may also be guilty of our actions as agents. That could be something you use as a reason for them to hire you. By the way, guys, you could be guilty of what I do wrong. Good thing I don't do those things wrong. Are you that sure about the other agents you're interviewing? I've been to these workshops. I have this designation, certification. There are some fair housing related designations available, so that could be a selling point. But it's pretty shocking initially to realize, wow, both parties, client and agent, could be guilty of each other's mistakes there or flat out violations. Licensees who work in areas where there are few minorities shouldn't worry about it because there won't be a problem with complying with fair housing laws. True or false? Maybe I should add ridiculous. That's false. They probably would have an even greater problem because they're not in as much practice, right? Less occurrences to keep them on top and sharp on the game. HUD testers have to answer truthfully if they are asked, are you a tester? True or false? They do not have to reveal themselves. That would defeat the purpose of being a tester. Good job. A licensee can't be held liable for the discriminatory actions of a property owner. The licensee must follow all orders of the client. Don't bring me any offers if they come from a Baptist person. Oh, I actually had not that example, but an old dude who had some acreage, and it was a very alternative religion that, in his opinion, that was making an offer. And I'm like, oh, well, here it is, live and in person. We're dealing with it right here, right now. We are one. Both are guilty of the actions of the other. We got to follow only the lawful orders, not the racist, prejudiced orders, just the lawful ones. BIC can be held liable for an agent's actions even if the broker was unaware of the discriminatory event. You got it. You getting it. The BIC's the head of the firm, liable for actions of everybody in the firm. Policies may help the BIC. Guess what? There's been an enhancement to this rule. As of this past CE, in fact, this current CE for this year, the BIC isn't even responsible for unlicensed people. Not just that hotshot wheeler dealer superstar agent that works under the BIC who hired that unlicensed person to be on their own little team. The BIC of the whole firm is responsible for them too. So that might result in some stuff down the road that BIC is going to get in trouble for too. Housing providers can charge families with children a larger deposit because of the increased possibility of damage or more wear and tear. You guys are sharp. Big fat false. Discriminates against familial. The house next door is a group home for mentally challenged teenagers. This is a material fact and must be disclosed. True or false? You got it. Protected class under disability. Not presenting an offer from a minority is okay if there's already a pending contract on the listing. That is a problem in a couple of ways. We're violating fair housing, and we're also violating North Carolina Real Estate Commission, which says present all offers. So we're double problems there. Housing provider must act with discriminatory intent before he can be held liable under the Fair Housing Act. Is intent enough? False. Intent is irrelevant if the actions are perceived to be discriminatory by a member of a protected class. Well done. Local or state laws conflict with federal fair housing laws. Take precedence. Local and state wins. Is that true? You're not falling for anything, guys. You're looking good. Yep. False. Stricter law wins. Takes precedence. For sale by owner are not governed by federal or North Carolina fair housing laws. They may discriminate as long as a broker is not involved. True or false? Well done. They don't allow this discrimination under North Carolina laws, but the federal laws do. But therefore, they can't discriminate because North Carolina does not allow it. Licensees charged with violating fair housing laws may be found guilty if they fail to prove they did not discriminate. There's a lot of double negatives there. I guess a short way to say this is, are we guilty until proven innocent or innocent until proven guilty when it comes to fair housing? We're guilty until proven innocent. We got to prove that we didn't do it. So the burden of proof is on us, the accused. If somebody says, how many, insert protected class here, type of people live in this neighborhood, what would be a good answer? That might be a variety of things. Put that in the chat for me. What sorts of good answers might there be? Hey, where does so-and-so live? Who lives here? How many of so-and-so? Leave. I'm out. I've got a great agent for you, and let me get a referral fee from them. Let them deal with you. There you go. Yeah. Something along those lines, right? Fair housing laws prohibit me from discussing that with you. Something like that. That's good. Anything about, I won't answer that question. Something to do with that, right? Yeah. That's probably the first move. Arnell says, let's keep it polite. Let's just let them know they may just not know. They might not be a raging horrible person. They might just need some guidance. So say, well, here's how this works. And a lot of people are surprised by that. And I just thought of this. I was watching a podcast video of a big time California agent / coach, and he does a lot of business still. And he literally on this podcast with, I don't even remember how many followers, a ton of YouTube video podcast followers. He said, well, here in our town here in California, over in such and such neighborhood, he named a neighborhood. That's where I forgot which group it was. I think he might have said Puerto Ricans or something. He said, that's predominant. And I'm like, oh my gosh, dude, you just said this to the whole world. And you're some big shot know-it-all teaching people and getting paid for coaching. That's what's out there, guys. So I don't know whatever came of him. Or if it even got caught by somebody, but that's exactly the kind of thing we're talking about. It could really go sideways for something like that. And it could be a tester, right? Who's calling you saying, I'm interested in such and such, but I want to know if there's other people like me living in this neighborhood. Red alert, right? Have your answers ready. Your BIC will help you, refine that and role play that. But basically, it's some version of this. Federal and state fair housing laws prohibit me from discussing that with you. If there's something important to you, I can't be the source of that information. I'll certainly help you with real estate advice, what values are based on what the comparables say, and I can interpret those comparables, but I can tell you property things, not people things. Can you refuse to work with somebody for reasons other than those covered by fair housing? Can you discriminate against somebody for being a jerk? Every bell and whistle in your brain is like, I don't care where this person came from, what they believe in, what they look like, but they're just hard to deal with, and I don't want to have that in my life. Yeah, sure. Thank goodness. We can make choices based on that. Non-fair housing things. There's no protected class for jerks. Sometimes the jerks don't reveal themselves until you're halfway into the transaction and you're like, okay, do I fish or cut bait? Do I see this thing through to get paid and just suck it up and deal? So that's a very real world possibility, but just keep it about the property, not the people, and you'll be in good shape. Now let's talk about us people in this room. Where are we? We just got through fair housing. That leaves income tax construction and investment, which is all within a couple hours or less. So that means we have mostly, we'll probably even knock it out probably in an hour or shortly more than. So we're going to have a lot of time tomorrow for review and the entire time on next Wednesday for review. So I would say if you have time, knock out some of your practice quizzes. Go ahead and definitely, at least through the weekend, do your final exam if you haven't already. Seeing some pretty good results from the people that have already done it. So I don't think you probably could, well, now that we've covered even a couple more chapters, with what you'll know, even if you took it tonight, you'd probably do pretty well. We've covered enough content that you should be okay. So this is from here forward pretty much your baby, and we're going to tailor a lot of it to your questions of me. And we'll tack on to it a session on Saturday, just a extra freebie, free for all. Obviously, that one doesn't have the same class rules. If you want to stay off camera the whole time, that's okay. It'll hurt my feelings. I'll cry a little, but it's okay. I don't mind. Really, I don't. But I'll see you tomorrow. Bring me your questions and have a great night. Hey. Oh, yeah. Oh, gotcha. I'll get that cleaned up. Thank you. You're welcome. Okay.